Good morning, everybody. Hope everyone's doing well. Should be a pretty interesting morning, possibly, right? So yeah, let's look at the news. All right, so we got Trump speaking later. There was originally no news today. So, I mean, there's no news this morning. I guess it's later. So I guess the sentiment we go into the market with when there's no news is possibly a more high risk, low probability condition just right off the bat. Things have been still cracked in correlation as we've been talking about. The bonds and yields are promoting one thing and the indices are doing another, right? So keeping that in mind, we're going into today like we did yesterday, in no rush at all. Let price speak, and whatever it offers, we'll do our best to get in front of. But it's NFP, right? NFP week. So just a reminder, our NFP protocol is, one trade, preferably, each session that we take a trade in. If we take 3 losses in the week, we stop, right? Every loss, we drop risk by half. That's like the normal risk protocol that we have. But because it's NFP, we already start at a lower risk amount. All right, we see that things have been extremely bearish. We've been calling for downside. We observed the S&P that I pointed out at the beginning of the week. Clearly, the tariffs are having a continuous negative impact as far as the equities. So, and then of course on the back end, there's a cracking correlation between the overall risk on, risk off behaviors we're supposed to be seeing when one market does something like the bonds and yields. It's supposed to impact the DXY and the indices in a particular way. Now, the DXY is definitely following what the yields are doing. That is going lower. For the bonds, I actually called out this fair value gap up here, and we had these equal highs, and you could see clearly, right, that draw on liquidity, the assumed draw on liquidity was on point. So that's that's a good thing. But again, the SMT that we saw early on below the equities, right, that being the S&P creating a higher low, and then the Dow presenting us with another higher low, and then of course the Nasdaq sweeping the low. That's kind of been invalidated at this point. So again, we're just going to have to continue to follow what the market's doing currently, and that is price is falling. Until proven otherwise, that's going to continue to be the case. One thing that has transpired is the fair value gap here that we were watching to see if it was going to hold as support to push price higher has collapsed, right? So that now turns into an inversion level. We have a volume imbalance, and then you can also see that there's this bearish breaker candle. And then right below that, if we go to the monthly chart, it seems pretty clear that price has a strong interest to get down into here, at least for now. So that's what we're going to assume. But we're going to keep in mind, like I mentioned, the fact that we have a cracking correlation, plus it's NFP, plus it's the beginning of the month. And now, we're in a time where there should be expansion within the weekly range. So we'll see if this downside continues. We also have this order block now. We have this inversion fair value gap. If price was to get above this daily fair value gap level, we have the midpoint of the order block. And then we have, of course, this swing high and this daily fair value gap. So the only way that I would assume, given the validation-invalidation idea that we operate within, is if 3 PD arrays on this daily chart get violated. Why the daily chart? Why just the higher time frame in general? Because when we see an overall disrespect of 3 PD arrays in a particular direction on the higher time frame, that's a really reliable tool or way of doing analysis to validate or invalidate in terms of identifying a change in the overall direction or narrative in the marketplace. Again, we have these lows down here. So we're going to continue to allow for price to keep going lower until proven otherwise. The way we do this top-down analysis here on this channel and just as ICT traders, it affords us the why, and it affords us the ability to accurately gauge when things have changed. And it also gives us the ability to trust the higher time frame direction until proven otherwise. Of course, there's ways to frame counter trend ideas, right? The overall assumption is this is going to the downside. That would have changed if the daily fair value gap up here was violated. I pointed out this wick here on Sunday, and I said, you want to watch that midpoint, see how that responds, right? Price came up into it, wicked through it, right? But then rejected, and then we got right back down below this daily fair value gap and the new week opening gap from the current week. And we could see the response off that. Now we've created a bearish order block. So if price is going to keep going lower, right, we also now have this wick here. So preferably, if we're going to blow these out, I don't want to see too much of a strong retracement because we're so close to this low. Okay, we're so close. So generally, when we're that close to a liquidity pool, I mean, it's kind of across the board, except for the Dow. Right, the Dow is still going to give us this SMT. Maybe the S&P blows through the low, hits this daily fair value gap. I've been eyeing this for the last 2 weeks. If you've been on the live calls, that thing's been there, literally for 2 weeks straight since we were up here. And then once we broke this low, right, that became something I was identifying. And then, of course, all these downside, sell-side liquidity pulls, these previous week's lows, those were also in the crosshairs, and then they beautifully delivered. Again, we have this large wick here. Whenever you see wicks like this in a downtrend, when price retraces back, that's classified as a premium array. The less it can pull into that, and then obviously have a response away from it, the better for us to support the downside movement. Again, all of this is in the context of still realizing that there's a cracking correlation going on, which of course is not what we prefer to see if we're in a healthy, validated, specific directional move. At any time, if this continues to go higher, right, at any time we could see a dramatic shift, right, back to the buy side, because the bonds and the yields dictate heavily influence what the DXY and what the indices do, and foreign currencies. Speaking of the foreign currencies, we called for this high to be taken as well. If price was going to fail to get down into here, and price gets back above this inversion fair value gap here, or this originally a bearish fair value gap for the euro, and then same with this. If it would have stayed above that, then we have pretty clear targets up here, and then if it gets really excited, we have a monthly fair value gap up there, as well as in the euro. And if the DXY continues to fall, if DXY continues to, support this breaker block, if it supports the weekly bearish order block, as you see here, and then continues to support attacking the level down here, which is a monthly fair value gap as well, then again, that's going to reverberate through the currencies, and it's going to have an impact at some point on the indices. But you can see there's that cracking correlation. So there's something going on, and if you just look at the overall world sentiment and what's geopolitically going on, there's tariffs. So obviously that's putting a lot of pressure on big companies, which is what the indexes are comprised of, a bunch of U.S. companies. It's affecting their costs, and it's kind of having a heavy impact on them, or just the assumption that this stuff is going to be implemented is having a dramatic impact. Okay, so that's pretty much why we see this large drop, and it's why we see the cracking correlation. I spoke about yesterday as well the fact that there's a bullish seasonal tendency, and there's also, maybe I didn't talk about it on the live call, but there's also a signature for the Dow showing bullishness in this commitment of traders report. So that is a lagging indicator. It's not something to just apply to the chart and start trading in whatever direction it's supporting right away. We have to wait for things to change, right? Overall, there has to be a turnaround. Something that supports that COT is, for one, the bullish seasonal tendency, and then of course the bonds going higher while the yields are going lower. That supports the commitment of traders and the bullish seasonal tendency, eventually kicking into alignment with what the chart shows here on the indexes. But of course, it's a lagging scenario and especially since we're on higher time frame view and looking at different things like that. So unless proven otherwise, right, we continue to follow what the market is sharing with us. And so far, for the indexes at least, it's basically showing us that it wants to continue to purge out anyone resting their stops below these lows down here. Okay, but these are some things that are going on through my mind, and things that I have written down, noted, right? Just keeping in the forefront of my mind just in case something changes and we start to see things confirm that, that being the potential for bullishness because of seasonality, COT, and then of course the bonds and yields relationship. So that is like the pillar of what it is that we do to validate and invalidate from a larger, more fundamental perspective. And then of course we operate from the higher time frame utilizing the 3 PDA rules above or below wherever price is currently at, in conjunction with what it looks like it's doing at that current moment structurally. Okay, so I hope that makes sense. It's very important. The more you hop on these calls, the more you'll see the continuous repetition as far as process goes. And then of course, the more time you spend here, the more evidence you'll see that these things are in fact heavily impactful when it comes to your consistency as far as top-down analysis and identifying bias and narrative. All right. So yeah, we're continuing to see things run higher. It is Tuesday, so we're still kind of the start of the week somewhat, but we are in a time where there should be some type of expansion. We'll see what happens considering the fact that we ran these highs here. Again, there's another level. If we break through that, seems as though the 5-year T-note has broken through that, or 5-year bond market has violated the fair value gap here. So if we're going to turn around and give a top here, I want to see it break through that. Otherwise, it's just going to continue to press higher, maybe even get excited enough to take out these equal highs up here. All right. So yeah, that's pretty much what we see here. So we're going to monitor that. And then of course, once we violate this low here, similar to the way that we saw the market operate when it took out these lows, how it gave a retracement here. You see that large wick? That was a tradable retracement, which we got in line with. Okay, at that current moment at that time, which was, I guess it was on Monday, right? So we're going to look for a potentially similar response, because whenever price takes out a higher time frame level, generally, unless it's just going to melt, generally it'll give some type of retracement back into whatever range was created. And the behavior as far as how strong the response is that gets us, in this case, back above it, that'll indicate whether we're going to have a strong retracement. But if it stays below it, right, and shows little to no effort to get back above the higher time frame level that was taken, generally that'll continue with the heaviness in this case. And then of course it's the same if we ran a high and then we spend little time above in reverse aggressively, or if we just stay above it, that would support the ability for price to stay above the liquidity pool, in this case, for this example, the high here, right, or this high or any other high, right? But again, for now, we're looking for price to continue to drop. We're looking to see what price is going to want to do once it breaks these lows. Again, we always consider power 3. It's a always present, always important aspect of your trading that must be considered at all times. Helps you with price navigation. I have a series on that if you want to go check that out. And again, if you guys get value from these videos, the content I provide, it'd be much appreciated if you share the video. If you like the video, leave your thoughts in the comments, just so I can, continue to have a dialogue with you guys and help you guys the best that I can. Good morning, Tony. Oh man, took $20 to $400. This is real and life changing. The way you see the market is superior. I appreciate you for one. I appreciate the fact that you've taken what I've said, You've given me your trust, and you've applied it and seen for yourself. And I play a small role in just trying to glue things together for people because that's what I needed. I'm not anything special. I've spent so much time doing this, and through my struggles, I've been able to discover ways to communicate things so they stick a little better, and it doesn't feel as overly complex and it's systematized. So the more you spend time watching, like with what my private community students get to be exposed to, the more you'll start to be able to find which things are important, at least from the way that I operate. And there's also a lot of universal things like top-down analysis, and we're all different, so we'll all have different models, and even if we have the same model for entry, we'll still have the ability to create our own path and find our own opportunities. But yeah, I'm grateful to see all the progress you've made, along with so many others that I've been getting really good feedback from the last couple weeks. And remember, this is just the beginning of the year, right? We have so much more to go over, and I'm grateful that you guys have given me your time. It's very, very appreciated. You guys can be on anyone else's channel that has a larger following, or someone that's more entertaining, or wants to sell you Lambo lifestyle dreams and whatnot. But that's not why we're here. We're here to make money. Okay. Of course, this isn't financial advice. Obviously, I'm not a financial advisor. But you apply the information, and you will come to your own conclusions as far as the efficacy to things. And then, of course, watching what I do hopefully allows you to borrow some experience, so then you can make the improvements that you're looking to make in your trading. All right, but good job, Tony. That's amazing. This is the second time within the last 2 weeks that you've had some pretty insane results. Yeah, this is a business, and with proper education, you can be successful. Yeah, proper education, proper people in your sphere of influence, and then at the same time keeping your sphere of influence small, because you don't want to be too diluted with way too many opinions, because then you can't make a decision. Or if things are way too complex and there's no systematic way of validating whether you should make a certain decision or not, that also plays into the ability to be consistent as well. But yeah, I'm super grateful to see that you've been doing so well, Tony. It's amazing. So good job, bro. But yeah, so let me set some stuff up real quick. Give me 1 second. All right, so just to spend a little bit more time here before we move on, we got the new week opening gap here I pointed out. There was that failure to get into this fair value gap. When it did that, obviously we assumed that price was going to continue. I said that if we get down below this weekly fair value gap, if it doesn't break above this midpoint, then that's a good sign for us to continue going lower. Same with these as well. And clearly you could see that because that's taken place, we also pointed out this large wick. We wanted to see the behavior from that wick, right? Is it going to hit that midpoint or not even hit it and then get back below the weekly fair value gap, consequent encroachment? If that's the case, that's providing evidence that we can continue to trust the things that we're operating within, and the assumptions that we have on the market. Of course, like I mentioned, we still have that Kraken correlation going on between these assets, the interest rate markets, and the indices. So again, because of COT, because of seasonality, and then because of what the bonds and yields are doing, we got to consider if things do provide evidence that there's a displacement to the buy side, and we start to really aggressively start pressing higher, we got to be ready to make that adjustment. But again, we keep that in our mind for a contingency plan, right? Or a backup plan. But until that's proven, we continue to press on with the higher time frame direction being bearish. The way that we do top-down analysis here allows you to be confident in the narrative you're painting. It allows you to trust it and then hold on to it until proven otherwise. And anything that goes against it, if it's not dramatically changing, like and going against you and like breaking PD arrays opposed to what your assumption is, the longer you can hold on to things, you know. So then any move against the narrative is classified as a counter trend idea. And then you observe what's above us in this case and see, okay, if there's a pullback, it's exactly that unless something dramatically changes. And so then you could frame counter trend ideas off, like say bullish discount arrays. If price hits them or takes a low or you know whatever the case may be, hits a fair value gap, so on and so forth, you can frame out or assume that there's going to be some type of retracement taking place, and then you can hop on to the potential counter trend idea. Of course, if that fits your model and you've practiced it, you know, just because I say something or just because you learn something and it, you know, makes sense in the moment, doesn't mean you go in there and just start gunslinging, you know, trying to take advantage of brand new things. You know, like you want to ease yourself into specific topics, okay? Because the worst thing you could do is go out there and you know, see that something works, and then all of a sudden just start utilizing it as a pillar in your analysis without getting the evidence and trusting it, you know, because time is what builds trust, and just seeing things play out, and merging them inside your process. It has to be a process. It can't just be a bunch of random things that sound good. You know, I mean, the results you get from doing that type of stuff is not ideal. You know, so, and you want to have repeatable processes because that's how you get repeatable, reliable results, right? It's just like working out. You know, if you want to get the gains, right? You know, and you want to work out properly, you're going to have to be consistent. And then each tool you have is like a different exercise, like a different workout for a different part of your body. But in this case, it's a different exercise for different aspects of the skill set of trading, which is a full suite of different skill sets, from risk control to bias and narrative to entry to targeting to validation, invalidation, you know, so on and so forth, right? So yeah, looking at the currencies, like I said, we're now above this high. Similar to the DXY, how it has a bearish breaker, this has now created a bullish breaker. So any type of retracement, unless the midpoint of this is violated, will be looked at as a retracement to go higher. It may do it, it may not, it may just continue to rage through if DXY wants to stay weak, and that sort of thing. We got this last up candle here as well. You can grab that, create that as a bearish or a bullish breaker as well. And again, it's the same thing, right? Unless the midpoint of that area is violated. There's also a fair value gap, so some people call that the unicorn. So if something retraces down into that, unless it violates it and then completely shatters this view, we'll continue to attack buy side. We have these highs, this high here that's been violated. We have this high here, right? So that could be the next stage before it gets up into this high. And then above this high, we have a monthly fair value gap, right? And if the DXY is also going to attack its monthly bearish fair value gap down here, then it's reasonable to assume that the currencies, since they have a very similar idea going on, it's very logical for us to believe that that's probably going to take place too. Again, unless something dramatically changes. What is that something? 3 PD arrays being violated to the downside. You know, if you want to be sure that there's an overall change and you're not in a retracement, this process that I continuously talk about is extremely helpful, especially when you frame it off the higher time frame view, because that's what truly matters at the end of the day, right? Everything else is subservient to what that higher time frame does. All right, so that is our view here as far as the currencies. And again, we got the DXY. We got this breaker here. I'd like to see us pull back into this weekly order block mixed with this bearish breaker. That would be the assumption, or that would be where the response would be. At least, I assume that's where it would be to then get us down into here. I've mentioned this before as well. I don't want you guys to forget things. That's why a lot of key elements I will repeat over and over. The higher time frame, if we're looking for a liquidity pool to be taken, specifically on the higher time frame, or if we're looking for price to trade into some form of a PD array, or if we're looking for price to trade away from a particular PD array on the higher time frame, you want to look at the economic calendar the same way we do on the lower time frame in terms of the macros, right? The economic calendar, many times, if you go and study this, will be similar to how the macros are on the lower time frame for entry, except the economic calendar is the macros, right? If you want to look at it that way, for the higher time frame, right? So if we're looking for price to respond away from this, we need institutional sponsorship because it's the higher time frame. It needs a lot of interest, right? A lot of manual intervention, or whatever you want to call it, volume, whatever, to be able to move from this time frame because it's the larger time frame. So yeah, when the news event comes, because there's not a news event today, we may not see the response we want from this area. So if today ends up in a consolidation, or it's not that fast in terms of delivery, that will be the reason. Okay, doesn't mean that obviously there won't be any move, right? And it could just move regardless, but ideally, for the most part, on a regular basis, this is a phenomenon that takes place. And when you go into times when there's no news event, generally you got to start your perspective and expectation on the fact that there could be a harder environment to trade. All right. So yeah, don't forget that. I repeat certain things, and there's a rhyme and reason why. Okay. But yeah, so moving to the indices here, we have again this order block here now. I mentioned Friday's high and Friday's low. If anything was going to take place, those two would be the most near-term liquidity. And what do you know? The Friday's high was used to couple the drop from the daily fair value gap, which then ended up targeting Friday's low on its way to the higher time frame levels. So you start to see from these liquidity pools that I mention all the time, they get utilized a lot of times. Most of the time they set up moves, and most of the time they also act as targets. Or sometimes they do both, right? Friday's high and Friday's low played a significant role in the previous couple days' delivery and price. So every time you start the week, there's a reason why we identify Friday's high, Friday's low, previous month's high and low, previous week's high and low, previous day's high and lows. And then, of course, the PD arrays that are in close proximity, right? In this case was the fair value gap up here. And then it was, aside from Friday's low, we had these lows, which are relative equal lows. All right, so I'm assuming, right, we've already kind of delivered into this wick, which is also, as you could see, a bearish order block, and price has now moved away from it. We've left these equal lows down here, so I'm not really anticipating a deep retracement. I'm assuming that price is going to blow that out in some type of quick capacity. Now, whether it holds here and maybe trades inside and gives us an inside day before the news event that comes out tomorrow, whether that's going to be the case or not, obviously we're going to have to let price continue to speak. But if it does show energetic movement, then obviously we have our framework and target to basically identify, which is here. All right, and unless something changes, like I said, the high up here is what invalidates my overall interest to go lower. Unless that happens, any retracement is going to be looked at as a counter trend idea. And again, this is just a good example of how the higher time frame view and our overall analysis concepts we operate within on this channel and as ICT traders, it shows a testament to how it allows us to trust things. Okay, and it doesn't allow us to flip-flop. And if it does go against, in this case, the down move, it's just retracing. What is it retracing to? Look for PD arrays. Look for previous day's highs. Look for down wicks. Look for PD arrays that are inverted, like this daily fair value gap. All right, and then anytime price gets up into there, your expectation, because nothing's changed overall, is going to be, I want to see some type of movement away. And if we're looking for a big movement to take place on the higher time frame, right, say it's going to blow these lows out, I'd prefer to have a news event supporting the idea, so then we could have a good idea that institutional sponsorship is in in alignment with what it is we're trying to see. All right, so yeah, it's 6 o'clock now. We have 30 minutes to the open. I hope everything I've mentioned here makes sense. If it doesn't, obviously you can ask questions. And again, just a reminder, please like the video. Subscribe if you haven't and you like the content. It's greatly appreciated. Again, I appreciate the time you guys spend with me, because you could be anywhere else, but you're here. And again, it's greatly appreciated. But yeah, so if we look at what price has done here, price has given us this move higher, swept out Friday's high, as I mentioned, and then that was triggered to attack Friday's low. We have, again, many back-end things showing that there could be some type of strong move to the buy side. But again, unless that's proven, we're not going to try to pick a bottom. We never pick bottoms or tops. We never buy equal lows or sell equal highs. The reason being is those levels like to get turned into liquidity, right? Or they are liquidity, so they like to get victimized. And then obviously that a lot of times pairs the opposing side of liquidity to smart money's positions, because that's the manipulation of how things operate. You know what I mean? And I mean, it's easily seen. Like this here, ran the high, clearly used it as opposing liquidity from Friday's high, kind of set equal highs here maybe for later, but then it again came down and swept out the Friday's low. So unless we get a strong displacement, again, unless this high is violated, my idea does not change. Like I'm still bearish until proven otherwise. But again, we keep in mind the fact that on the back end, there's COT that can support the potential for price to eventually turn around. The bonds and yields are also supporting that. But in the moment currently, there's a cracking correlation between that understanding. That cracking correlation being the indices are saying, nah, I'm cool. I'm going to keep sliding off the face of the earth. So unless that changes by showing a displacement and everything else stays the same, we're going to continue to press down for the downside, especially since we have these relative equal lows here and we are so close. They may give a retracement to try to show support, right? Get the retail crowd really thinking, or the traditional retail crowd, because we're retail as well, but get them to think that this is a strong level of support supposedly, and victimize them maybe one more time ahead of the news that's coming out this week. So we're going to keep that possibility in mind. I wouldn't be surprised though, again, if they do pull price back. This is I believe an order block as well. If we look at the upper time frames, see if we could find that. Yeah, so Friday's low. Let me paint that real quick. So yeah, again, the main thing that we got to pay attention to is if things don't change, again, you never, bold capital letters, never pick a bottom. I don't care who you learn from. I don't care who told you what, because they're not following what's being taught. They're trying to make their own opinions, and that's fine. But at the same time, when people are listening to people on social media or just the internet in general, if they follow bad advice, especially in the financial industry, you're putting people at risk. All right, those people are putting you at risk if you allow that type of opinion to be in your sphere of influence. Of course, it'd be wonderful for us to come in here and say, yeah, let's pick this bottom and see price run up here and force our will, because that's what we feel like seeing price do, because it's fallen so aggressively already, right? Like, wouldn't that be rational? I guess you could somehow make that argument, because there's other things in the back end. But again, who's telling you that or where is the likelihood that goes against this continuing to go lower, right? What is the opinion that makes us feel like, okay, it's definitely overextended? It is overextended, but that doesn't mean it's going to stop, especially with the geopolitical landscape, right? We have all these tariffs and crazy things going on with the U.S. Geopolitically. So, we got to continue to trust that price is going to continue to drop unless we're proven otherwise. And again, breaking above this daily fair value gap, as you could see, it has not even tried to get above there. It went up a little bit, but tanked off the midpoint of this wick, which is an area that we like to operate if we're following a particular trend, in this case to the downside. The order block here is still showing respect. There's no reason for us to think, oh, this is now going to be bullish, unless we're just going off of our own opinion and what we want to see. It doesn't matter what we want to see. It matters what price is telling us, right? And price is at this moment telling us it's not interested. There's things in the back end that will support the fact that price goes higher. If we do start seeing a change, right, and things start to look like they want to run higher a bit. But even if it runs higher at this moment, or even for today, that doesn't mean overall we're going to be bullish, because there's still 3 PD arrays that we have to see get violated in order to actually trust price is changing from bearish to bullish, right? So we got the wick, we got this fair value gap, we have the midpoint of this order block, and then we have the swing high up here. Okay, those are our 3 PD arrays. And then of course we have the new week opening gap. Unless those things are contested aggressively and things start to provide evidence of that, we're never going to flip-flop, we're never going to pick a bottom, we're never going to pick a top. We're going to continue to allow price to show us the price is declining. That doesn't mean that you wouldn't be able to frame some type of counter trend idea, but you have to understand what the condition is that you're trading within. If it is going lower, any retracement higher, unless things like what I mentioned are violated, it's just retracing. And the reason we could trust that is because we're identifying higher time frame pools of liquidity and just a higher time frame behavior, right? So I'm going into today assuming that price is going to continue to drop unless it's proven otherwise. And if we're proven wrong in that regard, we have all these different levels of potential inversion to then frame our setup on going against the downside objectives. Okay, so again, it's a lot of waiting, it's a lot of validating, invalidating, cross-referencing different assets, keeping in mind what we have available to us on the higher time frame, and then of course the levels that invalidate things. I wouldn't be surprised if they do pull back a little bit and get us up into this area. Why? Because there's liquidity up there. Preferably though, because prices ran so aggressively to the buy side, violated multiple PD arrays even on the 1 hour time frame to the downside, in support of what that higher time frame shows us in regards to downside. I wouldn't be surprised if they do pull back up here, take this out. But if they don't, because of the run higher, because of the drop lower here so aggressively, this should be a balanced price range. Okay, order blocks and breakers present you the ability to identify balanced price ranges, because that's what those are showing you. They create balanced price ranges. And then another key element, right? If you see a market maker buy or sell model overall that fully delivers, that's also creating a balanced price range, right? Most people don't know that, right? So they just understand the words, right? They understand the names, but they don't understand what these things are actually showing us. And, that's something that wasn't really thrown around a lot until, some of the private community students in the charter community started exposing it. It's been taught like that for a long time. It's been shown, at least for the small group of people that were informed based on the things that were taught in that community. But now you guys got some other insights that most people don't know, so, and do your own research on it. Don't take my word for it. Like ICT says all the time, go look at it, right? Look at, the reason a balanced price range is formed. Watch how they get respected in any capacity, and then go take that knowledge and look at order blocks. Look at how they deliver on that lower time frame. Look at breakers, right? Look at what creates that on that lower time frame, and then study how the response is as it respects the midpoint. Why does it respect the midpoint? Why should we expect that? Because it's a balanced price range. And balanced price ranges, if they're valid, we don't want to see price trade back into the midpoint. right? So, I mean, those rules mesh very well with even the understanding of, oh, this is an order block, so the midpoint should be respected. Or, oh, this is a breaker, so the midpoint of the breaker block should be respected, right? They mix very well, right? They overlap for a reason, because the breaker and the order block, and like I just mentioned, market maker buy and sell models, when they actually complete and deliver, they form a balanced price range. And if it goes against that and starts breaking through those levels, that's a point of invalidation that you can layer on top of the 3 PDA rule in that higher time frame. So you can see how there's a way to validate things in a very trustworthy manner, and you can easily adjust, knowing that, you know, if the rules are violated on these particular ways of looking at price, if those different rules are valid or invalidated, then you can adjust, right? You can reasonably change direction and be confident in your adjusted opinion, right? So again, that's one of the critical things and pieces of value that students get from being here in this community, you know? So not many people want to talk about this type of stuff for God knows what reason. You know, none of these people created it except one person. You know, so I guess it's ego or whatever the case may be. But that same ego for traders will be the reason they can't succeed. So don't develop an ego, you guys. Be proud and confident in yourself, but, you know, be humble in things, because it can hurt you. Right, so yeah, because we're at the beginning of the session, obviously, we got to consider Power 3, like I keep mentioning. And if you trade before the 6:30 open, you're trading before the manipulation can take place, especially since there's no news that can provide a volatility injection. You got to be very cautious. So the rules when there's no news event, the rules on these weeks are generally no entries get taken prior to 6:30. Okay, we're doing a lot of mapping. We're doing a lot of considering different areas, and, you know, we talked about balanced price ranges. You know, if this is going to be respected as a bearish order block here, right? This is the low of that. This is the upper body of it, or the lower portion of the body of the overall bearish order block. If we could trade into that and respect the midpoint, right, that's solid. And if we think of Power 3, if we're going to have a bearish day, we want to see that. We want to see it go against us prior to the open. And then once it hits a level up here that's logical, like this inversion for value gap or the low of the order block, if we can then zoom in once we see price, you know, maybe on this 1 hour time frame or 15 minute, if we can see price run into that and start responding away from it, then you could reasonably go into the lower time frames and identify whatever model you're looking for on that lower time frame. This is important to understand because you're now framing something off the higher time frame, and then once it hits that higher time frame level that should be responsive if you're correct, if you spot your model within the context of that and it can put that entry into a macro or you know, something after the open, you're framing it off the higher time frame, so you allow yourself to have more of an opportunity to catch a larger move because the higher time frame agrees, right? A lot of people don't get that either. You know, they think, let me just go into the 1 minute and find the model, disregard the higher time frame, not knowing that the higher time frame, if you want big moves, right? Maybe you don't want to be a scalper, right? And you want larger moves. Well, that's the main way that you can look to frame that and get yourself in front of opportunities that provide more than the minimums I talk about and ICT talks about, which are 5 to 10 points in the S&P, 20 to 30 points in the Nasdaq, you know. And you don't have to get more than that, right? Like just that small chunk can do incredible things. Anything you want to do that can allow you to fulfill it. But yeah, if you're like me, right, you want to catch larger moves sometimes, right? Why limit ourselves, right? But yeah, before the open takes JD consult, are we buying the NQ? No, we are not. If we do buy the NQ, it's going to be in the perspective of a counter trend idea. Hopefully a lot of the stuff that I just talked about, and I didn't even see your question, but I hope that answers that question. But yeah, any type of buys here, I mean, you can make the argument that we swept the low here, and that could trigger in a retracement. If we stay below this fair value gap here and can't even get to the order block, that just goes back to what I mentioned, how there could, potentially not be much of a retracement because we're so close to this liquidity pull down here, and overall we're still extremely bearish. Again, with everything on the back end like COT, seasonality, and the interest rate showing us that there's a possibility for price to want to turn around at some point. If it does, maybe blow up through this area and doesn't have much respect to this, and clearly, right, we'll be able to have a decent adjustment to get us up into here if the time comes and that type of opportunity presents itself. But yeah, we'll keep this in mind, obviously, but at the same time, we're going to continue to favor our downside movement. Okay, so any retracement is going to be looked at as such, right? It's a retracement. I prefer, if we do want to see a retracement that can trigger out some type of opportunity to frame an entry off of, I would like to see us get up into here. Right? It may not do it, right? Because we're so close. So yeah. So if you guys have any questions, definitely leave them in the chat. We got some of the wick behavior here. Again, even like especially with the euro too. I mean, we're so close. We have blown this out. So again, that's a higher time frame level. That's a previous week's high. For those of you that are new to the channel, these gray areas, you may be wondering what they are. Those are Sundays. So I have an indicator that highlights Sundays. So when I look at the chart, I can identify previous weeks and just previous Sundays. So it can just, it shows you where each week is. So if I'm looking for where's the previous week or, is a particular high from a specific previous week, I can identify that very quickly. Just, one of those things that consolidates your thought process because, we do have a system. It is a process. There are a couple things that we got to keep in mind when we're trying to make an opinion. So, any indicators you see are just there to assist me in doing that, just so I can, make it easier on my mind because there's so many things that can get us lost. Yeah, so hope you guys have been safe this week because again, things are definitely pretty wild, especially for the Dow. You see the Dow looks crazy. We do see a slight SMT here on this 1 hour chart. One thing too, if you guys don't know, I've talked about it before, but with SMT, right, if you see an SMT, you have to, well, if you're trading the indices, you definitely want to use a DXY to validate whether that's going to be something impactful or not. Because if there's a bullish SMT and the DXY is rallying, that's not supportive because the DXY and the indices generally do the opposite. So a lot of times that will, disregard the SMT and then continue to fall. Yeah, so let's look at this. So we see this retracement into that fair value gap I showed. So we have very obvious equal lows, not only on, we have lows here. We have relative equal lows here for the Dow. And then, like I mentioned earlier, we have a significant liquidity pull to the downside. For the S&P, we can see that, there is a area up here that could be targeted eventually. But again, I need displacement. Otherwise, it's going to continue to fall. And again, we got to follow our rules. We cannot assume, oh, that looks really beautiful. Let me just force my will on it because I want to see it go up. No, we have to see things provide evidence that that's what's going to take place. We see the SMT here as well. So we'll see if that stays intact. Again, we're before the open. So, we've got to make sure that we're very cautious. No news today. So again, we're not going to force things. Yeah, we'll see what happens if price does violate this. We have an inversion for a value gap here too. And if everything stays the way it looks, again, we're favoring some type of downside movement. So it's going to continue to be what we want to see. And you see the open price here. Price has at least so far created a bearish power 3, right? Stayed above it, and then price dropped. We do see that the DXY is wicking through the low. So again, we don't want to see it spend too much time back above this if this is going to be something impactful that sends price lower. Again, if the DXY is going to go higher, we need the yields to go higher. And then if the bonds go higher, right, we need to see that at some point, hopefully, impact the indices and turn them around. But there's that crack in correlation. So we'll continue to just keep our attention to these very obvious lows. I mean, look what it did. It stopped right before it. And we've just been melting because of tariffs, right? So, all right, give me 1 second, yo. Sorry about that. My freaking dog was losing his mind. But yeah, so we got 7 minutes till we see some type of volatility. So, I mean, we could have made the argument for price to give this little drop here. Let's go to the 1 minute. All right, we had the 450 macro. There's a macro there. You could see that delivered something. Again, this is all before the actual open. Right, there's an argument you could make for this to turn around because of the COT and all these different things. But again, we never pick bottoms. Okay, this here, right? If it does continue, maybe it breaks above this high. We can make the argument that this is potentially, if we see DXY continue to fall. And the bonds and yields, maybe the bonds turn around and the yields continue this, run to the upside. We can make the argument that maybe this turns into a market maker buy model, right? And the luxury behind market maker buy models is you don't have to catch it right when it starts. If you can identify it, as in like the pattern showing, and it makes sense with a couple other things, like in this case we have seasonality being bullish and commitment of traders, and we were for a time having the bonds continue to go higher. If we can confirm that, right, and we see it start to show interest, in this case to the buy side, then this level up here could be classified as a second stage distribution. But again, this failing to do that just further amplifies our trust in that price is not ready to do that just yet. Right, see these consecutive down candles. Let's see how price behaves around that. We're still not at the open yet. We still got 5 minutes. And a rule that we operate within that has proven to be very helpful in terms of not allowing us to take trades that look good but take us out is you don't enter as like that close to the open. Wait for a macro. 5 minutes before a macro is cool. And 5 minutes after, but preferably inside the macro, like the last 10 minutes of every hour after the open, and then the first 10 minutes of every hour. If we can get it to show our model within something like that, and then of course have it support across the different assets, that you're putting yourself in the best opportunity. We're after the open, so hopefully the manipulation already took place. We're inside of a time where the macros deliver, right? Because that's what they're used for. It's programmed apparently to do what's called spooling and give a displacement. So if you get caught before the open and it takes you out and price runs away in the direction you assumed it was gonna go, this rule, not taking trades close to the open, unless it's in the 6:50 Pacific Standard Time macro, it'll help you not get stuck in those types of areas or stuck in those types of moments. So let's go to this lower time frame. Look at this. So we do see an SMT here, right? Between these lows and these lows. And again, we see the SMT above the highs here, about to form between this low and this low. Well, technically it's actually already formed, right? There's SMT there. So you just add that to the other things that present the likelihood of price maybe turning around. So we're starting to build reasons as far as why we could trust price to go higher. But again, we need to see more evidence. We don't pick bottoms. We don't pick tops. And there's a reason for that, which, I mean, hopefully it's self-evident as far as why, because you just never know. You don't know if it's going to turn right now, especially when there's no news, especially when there's NFP. And if we were to wait, like I mentioned, right, we could, if we see price displaced to the buy side here, gets us up into this level. This can be our second stage distribution area, and we could, potentially use that to identify an opportunity within our model. Then, of course, if that doesn't take place, then guess what? You don't take the trade. And you don't need to worry about missing opportunities because, if you spend any time here on this channel, in these live calls or, at any time, even when I was live streaming last year, you see that there's so many opportunities of continuation. Things are going to take place over and over. You're going to miss moves. You're not going to get every opportunity. You're going to leave money on the table. You're going to get out too early. You're going to get out too late. These things are going to take place. So there's no need to be upset or think that you missed out on something and beat yourself up over it. Because if you do that, if you miss an opportunity or if you take a loss, guess what? Once you feel that way, you turn off your ability to see things logically. Automatically, you get pushed into emotional decision making, and we all know how that goes. All right, so yeah, I'm assuming that this is going to continue to press us lower, unless, of course, price does displace through this high. DXY is pulling off that low, so that just further shows me evidence that we may see price continue to try to blow this low out. Because we're at the open, we're going to wait, right? We don't take trades at the open like I mentioned. We're just going to continue to watch, right? There's an inversion here. There's a run on stops. We do have that SMT between the indices here. But it looks like, at least the Dow for the moment is looking like it has an interest to try to blow this out. We still have the downside objectives available. So let's watch how this order block acts within this inversion fair value gap after the run on stops. You can make the argument this was a shift. But again, does time line up with the model you're trying to operate within? Right? For us, well, for me specifically, again, I don't take trades even if it looks beautiful. Right? We have a regular trading hours gap up here now as well. So we're going to keep eyes on the midpoint. How big exactly was it? It's pretty large. If it's over 120 points, a lot of times I won't even try to attempt to get back into it. But again, we have a lot of different things showing if it does attempt to get back up there. We have logical reasons that could support us maybe adjusting and trying to find an opportunity if we get up into this area like I showed. All right. But again, unless that's shown, we're going to continue to identify if we can get down below this low. DXY is still wicking back above the low it took. we're inside that weekly bearish order block. So yeah, we're going to let price just speak for a little bit and then see what happens closer to the macro. Let the noobs get destroyed. Try to fiend for an opportunity, okay, while we sit back sharpening our view through our scope. That's a price did a slight run through this low. Again, we have this inversion here, so let's continue to watch. If price violates that inversion for value gap, it then turns into possible support, and then gets up into here. If it was to violate the midpoint of this, I mean, we violated multiple things, and we could start to make assumptions that this should give us a quick response above here. Because that's not the case, again, we are continuing to identify whether it can take this low out or not. But of course, again, that's the upside scenarios I just mentioned are contingency plans. We could see the inversion holding here. See the order block holding. Everything is in alignment. This up wick here, similar to the way that we view things on the higher time frame. You can see that's being respected. So yeah, there's a delivery there. Right. So yeah, thus far, everything is working out as we assumed it would. That is continuing to attack the lows, not really giving us much of a retracement because we're so close to the sell side liquidity. So you could see all the stuff that we just talked about coming to fruition. The areas of invalidation I mentioned also stayed intact. So guess what? It's a decent drop. Now again, you have to wrestle with the fact with the fact of like, was there something for you to engage in? For me, because of my rules, me not taking trades at the open or too close to the open, or because there's no news, not taking any trades before the open, obviously I missed this. Pointed this out, and rules sometimes make you miss opportunities, and that it is just it is what it is. You'd rather face the pain of discipline rather than regret. So yeah, we'll see what the delivery is going to be here. Let's see how it behaves when it does violate the low, if it does end up violating this low we've been talking about. We got that regular trading hours gap up here. Now, if this high was to be violated, that would make me start to believe that that's our new contingency plan. And then I would start to try to identify things above us. But again, if all that stays intact still, I mean, what reason do we have to pick a bottom? Aside from the fact that, it's so overly to the downside. Which, that's a hope. That's a hopeful mentality, right? And hope is not a strategy. So yeah, if we go look at currencies, that's interesting. Nice little turnaround there. We see the bonds are now continuing their rampage, right? This was just a bearish candle giving a retracement. This was just an entirely bullish candle, right? So if this continues, this supports a move against the sell side, right? So it would, if we do get a displacement above the high, like I mentioned, that is supported by the bonds and yields because of what they're providing us in terms of evidence right now. So you see this down candle here? See the run up above the high? This now becomes a breaker in some capacity. So if it stays below that, that's a supporting idea to get us down below. Because of the timing, I take no entry. And I don't care. I want to see it blow these lows out. And then we'll decide what takes place after that. So yeah, we're letting price speak with the lack of a news event. Keeping in mind, again, the SMT that we have. Now we don't have SMT. So the SMT was completely taken out of the game. We see, what is this? Is this a low? Yeah, it's a previous week's low, so we took out a previous week's low in the S&P. Definitely was a beautiful move down below that low, as we were talking about. Again, if you took that move, maybe you just have slightly different rules than I do. It's totally fine. Be an independent thinker. But again, you keep things in mind and use what works with you. Okay, so let's see how this behaves. Are we going to smash above the high? Let's see what DXY is doing. Is DXY going to stay below this area? Treat this as just a retracement back into this bearish breaker. This going lower supports a turnaround, right? So look at that, boom. Shift in market structures taking place currently. Now we got relative equal highs up here, relative equal highs up here. So because of this displacement, now my interest is starting to peak in terms of, okay, is this the low of the week now? We see that the Dow and the S&P have now blown out significant lows because the Nasdaq has not done that same thing. We could be seeing the start of a deeper retracement potentially. And of course, it's just that, it's a retracement. So given NFP, given the overall downturn, and now the likelihood for a retracement, our risk is already cut in half, right? Or 0.75% of what you normally use. Just because of the NFP, and because if this is a buy, if it does buy in the short term, still it's just a retracement, right? I mean, look at the Dow, right? So if the S&P and the Nasdaq were to turn around aggressively, there'd be an even deeper crack in correlation. So again, this is why we wait, right? We're waiting, we're observing, and my rules kept me out of taking this trade and holding it too long. If I would have entered the trade, it would be, first of all, breaking my rules, but I would have taken out for the minimums, because that's how we operate on NFP. We don't expect thousands of points. We get in, get what we can get, and we get out. So yeah, now we're returning back to this regular trading hours gap. So again, we'll see how the behavior is from this particular area, right? We could think about this as a potential market maker buy model. And if that was to fail, say it was to displace lower one more time and start to really get down into this area, showing no respect to these levels for price to go higher, then that would then be an opportunity I would be interested in if I find my model somewhere in there for the downside move. So yeah, we'll continue to see what price wants to do here. So yeah, this is definitely a shift in market structure to the buy side. Scroll up and see if there's any further clarity building aspects. So yeah, this, if it's gonna go higher, this is where it's gonna quickly increase the speed because this would potentially be a overall second stage distribution. So yeah, so the down move here, up move here, the midpoint of this, if it's violated, again, this should be a balanced price range. If it's going to go higher, right? Because we already offered and took sell side, already offered buy side, and now the retracement. This, if it responds from here, that would be ideal for the overall direction going higher. I would prefer to see it violate this high, then look for some type of continuation, just because of the overall area that we're at. Like we just swept out a low and now we're coming right back above it. And the overall intermarket relationships are still a bit cloudy. I mean, we see the currencies now digging lower. Again, we do have this as a considered potential bullish breaker, this one too. Until that is violated, that'll continue to be the case. And then same with this, until, for me, if we get above this high, I feel a lot more confident to get into some type of, maybe this order block can be my continuation to get above the highs up here. But if it doesn't stay above this area that it just reached into, that's an issue, right? And if it violates this low, then that could potentially set up an opportunity for us to maybe use this inversion for a resistance level, as well as this regular trading hours gap, to then maybe target the lows further. But as of right now, we're inside of a seek and destroy. Price dropped overnight, so it's not unreasonable inside this bearish trend overall for them to come back and sweep this out. We have London's high up here. So if there's a buy that is offered here, London's high is going to be in the crosshairs in conjunction with the order block here that we've been mentioning. So yeah, we're not interested in taking any entries right now because it's not the macro. And again, rules are rules. And if you don't want to follow the rules, it's your prerogative. But I'm not going to showcase an irresponsible way of engaging. I will not do it. Over the last 5-6 years, I've had enough pain from now listening to what I tell myself to do and what I've learned to do that provides the best results. So I will not, especially when people are watching me, I will not break the rules, because then that'll promote you to do the same, and I can't sleep at night. That's the type of stuff that I do. It won't happen. I refuse to do it. So yeah, we could see how, like I mentioned, if the midpoint of this assumed potential balanced price range, if it was going to continue and be a solid move higher, again, the level we wanted to see push price higher did not get above it and deliver the way it would have had to deliver if we were going to go higher. So I'm still assuming downside is going to be favored here. So now we got an inversion level here we can monitor. All right, and again, if this is not in your model, if it's not something that you operate within, you don't take the entry, you study it. Okay, but we have a pretty solid likelihood that this should act as resistance here, given how prices behave so far. And we see across the board that things are definitely ramping up, pushing lower for the time being. So yeah, if we get below this low, this down movement here becomes a bearish breaker. That may then solidify a framework for price to continue and try to blow this low out. So yeah, this low to that high, we shouldn't come into the midpoint of that. You could just use this high to that low, that breaker block, right? The delivery through it should not violate that midpoint. It should be able to hold that if it is going to be a reliable bearish breaker. Let's label that real quick. See our objectives down here. Approaching 5 minutes before the macro. Pretty interesting how 5 minutes before the macro, price is delivering through a level, potentially setting up an opportunity to engage a potential short. See what happens here. See the 30-second chart offered a YouTube model. Not many of you guys have the seconds chart, so I didn't hop down. But if we would have delivered through this high again, like I mentioned, that would have been what I would have been interested in. So yeah, let's see what this does. This is something we got to watch right here. It should not get back above this inversion for value gap. It's already hasn't really created this breaker. So it's until it violates that low, it's not valid. But it is going to be valid if it violates this. If not, then so be it. But for now, we have this inversion for value gap to watch. If it's going to go lower here, like within the next 20 minutes, 30 minutes, I need to see it hold this and allow this to instigate the drop as an inversion for value gap. If it gets above that, then again, think about the PD arrays, right? The 3 PDA rule. It works on every time frame depending on what time frame you're on. This is for intraday volatility. Higher time frame, 3 PDA rule is for overall narrative. Very important distinction. Okay, so yeah, look at the delivery here. Regular trading hours gap midpoint is being respected there. DXY is still above the low that it violated, but it's still pulling back into its apparent bearish breaker and weekly bearish order block. let's see what happens here. So yeah, breaking up above this inversion fair value gap, that is something significant for me to then consider. We may retest this high again. And then once we get above this accumulation level, but over here it turns into a second stage distribution, I would assume that this is going to push us higher, get us back up into some of these levels, and then maybe even get up above these highs here from overnight. But this is too reckless for anybody to make an educated, reasonable decision, because if you got into sells, right, we pointed this little idea out, you'd have had to take the minimums. Otherwise, you would have been taken out. So that shows evidence of the minimums serving you well, even in crazy conditions. And then, of course, if you were looking to buy this fair value gap, you would have got blown out. But again, this again shows the validity behind the rule I mentioned. Do not take entries before the open, and do not take them very close to the open. Let price speak. Don't feel like you're going to miss a move. If you know what the model is that you enter within, if you go to the lower time frames, just remember the rules. Keep in mind what the higher time frame is doing. And then once you see your model in conjunction with that higher time frame, shoot the shot, right? Manage risk properly, and if you do those things, what is there to worry about? What's there to be scared about? It's going to take a while, regardless, for anyone to make some insane amount of money. We don't like to think about it like that. But no matter how you look at it, unless you have hundreds of thousands of dollars to put into the market right away, or a decent funded account that you can reasonably manage, it's going to take you some time. And you don't want the market to force you to accept that, because the market don't care. It'll blow you out and not care about you at all. All right, so we see this nice little movement up here. Let's go back and flip through what we see. See a pretty. So we blew that low out. All right, so pretty much across the board, these different liquidity pools have been violated. So there's not much we can operate within or use to operate within in regards to that. You could make the argument that yes, it took this liquidity here. If you go from this current high to the extreme low, equilibrium's right here. So if we could stay above that and then continue to respect this inversion to go higher, maybe breaking above this high could present us with something. But as of currently right now, you have no reason to push. We're near the macro right now. That's great. But just ask yourself the question, if you got into a trade right now, which side would you be more confident in? Is it providing any evidence that one side's better than the other right now? We got the higher time frame to keep ourselves rooted in, which is potentially continuing to want to blow out sell side here that's really, really close and available. But other than that, what do you have in here that sincerely builds trust for you to think, yeah, I'm just going to jump in? At least for me, trusting the higher time frame because things are still staying intact, not really fully going against the downturn. That's what I would support. But there's nothing in here for me to want to engage within the models I use. Yes, this inversion for value gap could send price below, right? We traded through it, back through it. Maybe this is the time when it wants to deliver through it. But again, for me, it's not enough just yet. I'm going to let it continue to wait. And so yeah, it seems, this drop here seems pretty convincing somewhat. I'm still of the belief that the lows will be violated. The areas in which, if price got to it, that would support us going higher, they have not been delivered. So what reason do you have to disregard that higher time frame? There's none. Unless you're getting fooled in here thinking, oh well, it's whipsawing, it's taking too long, right? Whatever your thoughts may be. Look at this fair value gap. Let's watch that as well. Once it breaks down through this low, that is going to create the bearish breaker. See if it's still now it's not as clean as it would have been earlier. Let's go to the 5 minute here. Let's take some of this off. But yeah, look at how vicious that is. Looking at it from this time frame, there's more of an argument for us to continue as we have been favoring. It didn't blow through any of the levels that would have changed my mind. So yeah. And this is even more obvious, right? We've got that down wick I mentioned earlier. Midpoint. Pretty much been respected. So yeah, looking at this time frame at this current moment, I'm definitely behind price blowing these lows out. Anything that would have changed that perspective has not delivered. Go to the 30-second chart. Let's see. See if this inversion for value gap can still be relevant. These are relative equal lows, even though this kind of somewhat blew it out a little bit. That, in my opinion, that's not enough, especially being so close to this. Again, the supporting idea where we're so close to that low and price has not retraced aggressively to the buy side in any real meaningful capacity besides taking this high and then immediately getting back below it. There's nothing going against the fact that we're still going to go lower. I like how it's respecting this inversion here. I just don't see any. Unless you want to make the argument that this is a run on stops, that's a shift in market structure. But the overall idea that we're inside of this consolidated sloppy choppiness, you'd have to, at least if I was to execute, my risk is cut already already low. So it'd be cut even lower just to get in and get something. I'd like to see what takes place into the silver bullet window. But this here's a 650 macro, right? So like I said, if we wait for the macro, something a little more clear may arise. And, price getting from here to the lows here is a little more logical than, thinking price was going to present an opportunity when it was up here. Again, so there was this potential opportunity here, but it was at the open, so the rules state that we don't take an entry at the open or too close to it. We wait for the 650 macro. So all this happened and I didn't care. It's outside of the rules. This one, on the other hand, right, we're still respecting this inversion fair value gap. So let's see if this high can stay intact and then get us down below here. And then, whatever happens down in this level, once it takes the lows, we can make an even further decision. Yeah, we've done a decent amount of work up here, swept out these highs. We've left London's high. All right, and it's just been a very back and forth choppiness. So if you would have taken a trade and took a loss, just think about it, right? If you follow the rules, you wouldn't have taken a trade or taken a loss. But if you would have taken a trade and took a loss, kind of disregarding the things that we've talked about today, you'd be regretting it because you look at price. You move up in time frames, you look at this and you're just like, what in the hell is that? It's just really sloppy. It slowly looks like it may still be gravitating towards the assumed direction we've been wanting to see, which is this low being violated. But again, it's whether you took a buy or a sell, you're getting taken out unless your stop is huge. And none of us want that. None of you should want that. So let's see what this is going to do. This looks to me like it's building up here. Again, trying to sell the idea that this is strong support. DXY is still pulling back. If we go look at DXY real quick, it's still running backwards. It has not given a move back down to the downside. We are in levels that it could present that eventually. For the time being, though, DXY is retracing higher. That supports this trying to get down below here, at least for the time being. We got the Dow dropping. We got the S&P dropping. So the Nasdaq looks like it's the sick sister between these three. And we don't see really any SMT at the lows that look reliable. I mean, you can make maybe the argument that there is here, but I mean that's very minuscule, not really important, at least for me. So yeah, I like how if you take this high to that low, I like how we've stayed inside the equilibrium, but now we're below it. If we look at the first fair value gap of the day, that's right here. Measure that out. If price can stay below that as well, that continues to support that, price is going to get down here. But currently we are in consolidation, right? So we need to see price open up in a meaningful way. Otherwise, because of the news events we have it's very likely that things can be very foggy and sloppy, choppy. So if you didn't take a trade and you've been listening to things that I've been talking about, and you've been able to sit here and witness what's taking place and think about the things we've talked about, you should be proud of yourself, because most of the people that majority of the trading population, has probably taken multiple losses, blown their account, in pain right now. But while they're in pain, we're waiting, so if something opens up, we have clarity. We have a clear mind. So if it shows something that's worthwhile, we'll be able to identify it, because we're not from a place of fear right now. We're from a place of intel gathering. That's our objective right now. Gather intel, what is going to look like it's going to be supported over the other. So we see the area here got respected, dropped, attempted it one more time, dropped, stay below the regular trading hours gap. If we can stay below the regular trading hours gap, and we could stay below the equilibrium of this level here, or of this little range, and we could end up staying below this first fair value gap, in conjunction with the higher time frame sentiment of possibly continuing the drop, maybe DXY is going to look to turn finally and go higher a little bit. All of that supports our idea in terms of our interest to go lower. But yeah, I would make the argument also, just for completeness sake, that if price gets above this inversion fair value gap, I'm not interested in looking for any type of shorts. Right, but if we stay below this, we stay below this, we stay below the regular trading hours gap, then there's a reasonable argument the price is going to look to continue to be weak, especially if DXY drops. Yeah, just one more reminder, if you guys do like this content, get value from it, definitely like the video, share it with your friends. I appreciate your guys' time here as always. And yeah. So yeah, let's see what happens here. So you see that respect off that level? Again, there's more interest, as I've been stating, for price to want to blow these lows out. There's nothing in here screaming, yeah, it's going to turn. So those assumptions have served us well. And there is the blowout of the low. So all the things that I mentioned in terms of, different areas that allowed me to trust that it was still favoring shorts over the buys, you want to make sure you note those things, because they are continuous. Maybe the PD array sometimes varies, like this is an inversion. Sometimes it'll be a bearish order block. Sometimes it'll be, one of the other ones. But then, of course, the range we were consolidating within, if we stayed below the midpoint, we stayed below the opening range fair value gap. That's the first fair value gap after the open. All of that stuff has supported us in trusting that downside's more favorable than, thinking that, price is all of a sudden going to run from the lows and we're going to pick a bottom. This is a beautiful example of, the rules, right? Sometimes the rules keep us out of trades. It's also, a good opportunity to see certain levels in price on this lower time frame holding or helping us hold on to our assumption of that higher time frame. And then, of course, it's also a testament to how important trusting the higher time frame is, regardless of what shows on this lower time frame. If we thought that this run higher was going to disrespect that daily time frame from going lower still, again, you would have got killed. Okay, so there's a lot of things that show validity in terms of the analysis we do that has been shown today. And then in the moment, also real-time analysis and different things that were supporting the idea that price is going to continue to go lower. I pointed out a level that if it was respected, I would have trusted price turning around. That did not respect, so it failed. So that added even more layers to our ability to trust that, this low is going to be violated. Now, I do have to say, if price has taken this low here and starts to rage like this and gets above this high, my interest immediately goes into, maybe this was setting the low of the week, and maybe we'll see a more protracted run against the sell side delivery. But again, if this stays intact, this is going to act as an intermediate term high. There's a upper high here, lower high here, lower high here. This hit a fair value gap. So this should be able to hold if price is going to drop lower. You want to learn more about the identification of certain highs, you can go dig into ICT's episode 12 in 2022 model. So yeah, the easiest thing to identify is intermediate term highs. It's, some of the more important highs as well. And the key signature is when it retraces, the high that retraces into a fair value gap, that generally acts as an intermediate term high. Intermediate term highs also act as a validation and validation tool on top of the other things that we've talked about. So here's that fair value gap, right? So we've already committed to the fact that price is going to sell off. And again, the invalidation would be up here. So yeah. Still inside the 650 to 710 macro. DXY is still giving a nice strong ability to stay above the lows here. We are inside a potential bearish breaker. We can actually remove that and then just keep the weekly bearish order block levels. Again, I don't think that we're done continuing to drop until, maybe there's a huge displacement here. Right? If that is the case, then, these consecutive down candles, we'll have to study how price behaves if it hits that. And then if it gives a strong movement, we could then start to position ourselves for continuation to possibly target buy side. But until something like that takes place, we still trust price is going to go lower. The question is there something in here that presents your model? If not, you have no reason to think you missed something. You have no reason to think any negative stuff about anything just because price moved. We're doing a systematic operation here. We need to wait for certain things to take place in order to trust particular decisions. And coming off of this insanity, right, this back and forth, let's kill everybody type of mentality the market has had, we got to wait. Let's let price speak. What's the rush? Let's let it speak so we can be good traders. Let's follow the rules so we don't blow ourselves out. Let's do consistent things so we can have consistent results. So yeah, let's continue to watch what this is going to do. Again, so we've taken out this low. So we got to see how the behavior is going to be from here. Because the DXY is, whoops. Why is it not letting me pull up the DXY? That's weird. Yeah, so yeah, because of DXY's given this strong retracement, we've now broken above this. So let's see if this has any validity to hold price going higher. Otherwise, this weekly bearish order block might give it the energy or interest to then try to punch the lows. If that is the case, then some type of displacement to the buy side would then become a little bit more valid if it was to take place. But again, we have a huge crack in correlation going on. So yeah. So the Dow's down here. That was a pretty nice move. Pretty strong move for the Dow. There's a YouTube model in there. Much cleaner for some reason than the Nasdaq has been. But it, that happens sometimes. I don't trade the Dow, so guess what? If you don't trade the Dow, you didn't miss anything. The S&P, we could see this is high resistance delivery up until this point in time. Why is it high resistance? Because these huge retracements all the way back, and then of course it finally opened up, going into the macro. See, before the macro, after the macro, right? See, again, I'm still trusting the fact that we're going to continue to drop. We have another layer of sell side down here. I'm definitely going to continue to monitor DXY. Looks kind of like somewhat of a mess, right? But it did give this strong retracement. So let's see what it wants to do from here. Let's take a look at these highs. So again, there's nothing at all supporting the price is going to turn here. There's literally nothing, Everything is, look at how it behaved once it got below the low. That's important to see, right? It came below it, didn't even allow it to come back above it. Left this fair value gap open. That is indicative of weakness, right? It hit the midpoint. That's institutional order flow entry drill, continuation variation. And then also, you can argue that this run on stops here, large shift in market structure, the return back to this fair value gap here presented you with a potential YouTube model opportunity. All right. And you can see too that this has been offered inside the overall macro. See what's going on. What can so yeah, this delivery here in the DXY is definitely something that kind of goes against my interest to be able to trust that we're going to continue to go lower. Because there's been such a crack in correlation, when I see that type of stuff, I'm very cautious. Because at any given moment, if we see this continue to tank, we've taken out the sell side, a retracement could take place, right? It could run back against that because of the weakness in DXY. And then the strength, or not strength, but interest in the bonds to go higher and the yields interest to go lower. So you can see that the yields are very much respecting the weekly fair value gap here. That's now turned to an inversion. We see the 5-year and the 10-year are declining pretty aggressively. The 30-year is taking a little bit of time, but overall the interest is favoring downside. That favors downside in the DXY, a possible upside in the indexes. But again, nothing's proven that. Right, so if you take an entry, you have to set aside any of the intermarket relationships and then just allow yourself to go in and take entries off of the current price delivery and relationship between the Dow, S&P, and the Nasdaq. And generally, I don't like to do that because I have a process. That's not to say you couldn't take this entry, right? That's not to say, you couldn't have taken this early entry here. But again, it depends on your rules, right? If you're trying to apply certain rules, you're going to see the rules that I apply, the result of them. Sometimes I'm not I'm not allowed to take trades outside of the rules, right? So you'll see sometimes things get missed. And because the rules are what they are, and over the last 5-6 years, they've proven to, for one, protect me, but then also provide reliable, repeatable results, I'm willing to sacrifice certain ideas in certain conditions if certain things aren't met. You as a trader have to be able to do that. Whether you follow the exact ones that I do or whether you allow yourself to break the rules in certain scenarios, that's obviously, again, your prerogative. We've called the direction, right? So hopefully that's something that you can then make your own decisions off of, because that's pretty much the entire goal right here for this channel, is to get you clarity so you can be your own signal provider. You don't want to turn yourself to a junkie. You want to be able to get in and be confident, so when you have to pay rent, if you're going full time, you can trust your abilities. That doesn't come from demanding signals or having the mindset of a signal taker. If you do look at signals or want to look at some of these live calls and different things as opportunities to gain experience identifying good opportunities, that's a better way to look at signals rather than, let me just get into every single thing this person does, even if my model isn't, or even though it doesn't make sense to me. Just because he's saying it, I want to get in. That's a horrible mindset, and you won't get anywhere with anybody if you do it that way. I lay my rules out pretty strictly. The risk management rules that I operate within, the targets, right? If there is ever an entry that you decide to take on, your own free will and of your own decision, because I'm not a financial advisor. But if there is times when you do that, keep in mind, right? Aim for minimums. In your own trading, that's what you should be favoring, because minimums allow you to have taken something like this and still be profitable, even if price pulls back on you, right? Or have a consistent result, even if you're wrong. And then, of course, once the minimums are offered, if you can ram your stop a little bit in profit and give yourself free trades, maybe it comes back and stops you out. So who cares, right? If you're in a trade and it blows past the minimums, put your stop at the minimums. So then if it comes back and tries to hit you, who cares? At least you got the minimum, and be satisfied. Because the less satisfied you are, because think about it this way. If you saw a $20 bill, if you have a small account, right? And maybe that's the only amount that you're used to getting is $20, $30, $40. If you saw that kind of money on the floor, would you take it or wait for it to be more money and let somebody else take it? And it's the same too if you're trading a funded account. If you saw $200, $300, $1,000 profit flashing, are you really gonna sit there and look at that and think, I need it to be more? If you saw that in real life, you'd snatch that up in a second. That doesn't mean you take $1, right? Any of us will probably pick up even $1. But that's not the point, right? The point is aiming at the rules and solidifying your perspective of the rules in the right way, and being satisfied with the things that are reasonable. 20, 30 points is reasonable, especially for Nasdaq. Sometimes you'll get more. Yesterday, I think it was yesterday, I tackled a 97-point run in a horrible, choppy, sloppy condition. So I didn't have to take that much, but it just decided to do that. But I moved my stop into the minimums. So if it would have taken me out, I wouldn't have cared. Right, so we see that the DXY here is turning now. So that makes me have the opinion that, this is just a retracement. You can see the very sharp retracements after large, sharp moves one-sided. This is indicative of high resistance. We are in a high resistance environment. All throughout here, it showed you we were in high resistance. All these retracements in here that are having very sluggish, stuck in the mud behavior, it's definitely providing you, pretty clear evidence that we are in high resistance. Watch this inversion for value gap here. We see a run on stops above this high. Once it breaks this low, that's a shift in market structure. And we have this overall fair value gap in here. If this is going to be respected, we need to see the midpoint of this area here not be breached. So if you were to, hypothetically take an entry somewhere in here, if your model was presented, your stop would have to be above this midpoint area. So yeah, take some time to study how that operates, and then see how that's going to behave here. Yeah, see, so look at that, beautiful. So this up candle here, or these up candles, followed by this decline. These down candles here become a bearish breaker, bearish order block. So again, that's why the midpoint here needs to be respected. So you see how this phenomenon happens over and over and over and over again. So then as price is printing, you're able to observe these things and continue to build reasons why you trust price continuing to run in a particular direction. All right, so I'd like to see price return back into this, keep DXY running higher before we blow this low out, so then maybe I can use this as a potential continuation. Again, because, look at how big the risk would have to be if we go off of that. But, that's reasonable if my risk is already cut as much as it is. I don't think I like the size here. It's like 1-to-1. It is pretty extended, so, you'd have to make a decision whether this would be worth it or not, or would you rather just wait? There's another macro coming in about an hour, so maybe you can schedule around that as well. But yeah, let's observe and see how this behaves as well. It may not even offer it because, again, we're so close. So it may just slide through and break it entirely, especially because now DXY finally opened up and is now pulling aggressively towards this weekly specific area. Remember how I was mentioning when something blows out on the higher time frame, the way it behaves once it comes back above it, in this case, blows out a low and comes back above the low, the way that behaves is very important to identify because, you could see the response. It's now aggressively pushing back above it. That's allowing things to open up that are opposed to that overall idea. So yeah, it didn't offer me a slight retracement, so the opportunity just didn't present itself within the model I like to operate within. I don't just throw entries in unless it presents me inside my model an opportunity. But pretty much all the targets that we've been identifying throughout the morning have been met. So we're going to observe the fact that these are equal highs. There's no reason to believe that those are going to be blown out. They may get blown out. If price returns back into this area here, I want to see how the behavior is, right? Because it may actually set up a higher time frame delivery, even though this lower time frame already delivered. We could very easily pull right back into it, use it as another area on the higher time frame to then reposition for a larger time frame move. Rather than the early opportunity that was presented in here, which did not offer, like I mentioned, a move. Maybe it did on the 15-second. Yeah, kind of offered it in the 15-second. Right in there. So yeah, we'll see what happens here. Yeah, full targets have been met. Overall narrative analysis has been very on point. All the different things that would trigger a different opinion. The ins and outs of my thought process as far as why I figured sell-offs were going to be more impactful. All that stuff was in alignment. The tactics we used to identify which side of this consolidated market would be favored over the other, right? The different levels, the daily open price, or the opening range fair value gap, the inversion fair value gap here, the equilibrium, the response away from an area up here that I wanted to see hold price if it was going to go higher. Because we stayed below all those things, I favored price going to the downside again, right? And supporting that more, and then eventually blowing out the liquidity that we had identified throughout the morning. So again, all of that I just mentioned, all these different technical tools in the toolbox that we have, again, I'm going to always say this, those things are way more important than entry, especially if you don't have those things in alignment, if you don't have rules that you follow. Again, not many people say these things because it's not sexy. It doesn't sell, but I don't give a shit. Okay? I don't. I want to see you guys thrive on your own. And then, hang out here, just hang out because you like being here. You know what I mean? But yeah. I guess it is what it is, right? Yeah, again, I appreciate you guys spending time with me. Those of you that are here consistently. I love to see things like what Tony said earlier. He's doing some amazing things. And it feels good to know that I can provide value that can help you guys. Because God knows how bad I needed that. I needed someone able to be willing to sit and do this type of stuff. It would have meant the world to me. So I'm glad that it's having an impact on a decent amount of you guys. But yes, so I want to see what happens. This is going to be kind of interesting. Price seems like it really wants to get above here. So how the behavior is once we do breach this high up here. And then, of course, this fair value gap. If we're looking at the 3 PDA rule on this 1 hour time frame, you can make the argument that this fair value gap's been violated. Swing low is also getting tapped into. Then we have this fair value gap as well. If it blows through that, we still want to consider the fact that we do have this weekly order block that's bearish. It's still overlaying this price delivery. But again, we whipsawed through this low, and now we've quickly came back above. So that supports price potentially wanting to turn around and go higher. But again, that has to start being justified in the bonds and yields. For some reason, the bonds and yields seem like they are not fully being followed by much of anything, right? Except maybe the currencies. But the currencies, I mean, you could see they're kind of at a point where they're kind of stuck now too. Did give a pretty strong response as we anticipated going into the week. But we'll see, as long as the bullish breaker holds, that should continue to support price going higher. If it breaks through that, if we see the bonds turn around and then the yields continue to, maybe start marching higher, then obviously that will support the potential change from, in this case on the currencies, bullish to bearish. And then that would support us going further to the downside, even deeper than we already have for the overall indices. I wouldn't be surprised if this turns into some type of decent retracement. Right? We can outline the last down movement. Right? Price may look to run up and target that. Did leave these equal highs up here. But yeah, we're definitely extremely excited to get down through the sell side. We have, again, taken out those significant higher time frame sell side liquidity pools. So I wouldn't be surprised if there's some kind of turnaround in the short term. But for now, obviously, we're going to continue to favor continuous downside delivery because we don't pick bottoms and we don't pick tops. So the best thing we can do is just continue to watch price march in the overall direction it's been marching within. It's very sporadic this morning. So because of the elevated risk due to NFP, because of just overall the crack and correlation between these other assets, it's just a wonderful day to practice your ability to wait. Okay, don't be wild. There's no need. Overall, we've been correct as far as watching price go lower. Just make sure you're trying to pay attention to all the different elements that we've talked about today that confirm things, the higher time frame analysis, how trusting that higher time frame down delivery on that on the indices on the higher time frame, how that allowed us to not sway and commit to price being bullish unless it was going to prove itself. The overall stuff that we've been able to operate within and the things that we do continuously provided evidence of validity this morning, right? We're not flip-flopping. That's a really critical element that's offered to you by doing things in the way that we do. Everybody, when they saw this go higher here, they probably tried to buy and then they got wrecked. And then they're like, oh, let me take a short, not even caring about any macros or anything. And then they took a short and then got beat up again. And then maybe they tried to buy again and then they got beat up again. When they could have just said, oh, I'm just going to favor shorts. And then maybe if their model performed, if the model showed up and they're being disciplined, maybe they would have been able to find something. But yeah, the process on how you get to that decision is more important than the decision itself. All right. And then once you have the process down, then you can start seasoning your ability to identify more opportunities. And then, continuation. The world opens up once you're able to submit to these things. So yeah, let's watch how this behaves. If it violates this, if it can't stay below that, there's no reason that, especially if DXY falls here, there would be no reason for it not to blow these highs out. So we should see a quick response here if it's going to continue. Again, we've taken out the important higher time frame sell side liquidity pools, so that can trigger some type of strong movement against, just so it can pull back on anyone that has a order below here trying to catch the continued move with a sell stop, right? You know how they set a sell stop at a level and then it violates that level, turns it in, like it turns on the entry because they think it's going to be support, or in this case strong resistance to then continue lower. Well, this retracement here would make sense because they want to take them out, because that's not how the market operates, right? So let's see what's happening here. So the bonds are still, they don't seem like they're very weak at the moment or interested in attacking the downside just yet. Doesn't look like that's the case. We're still respecting this weekly fair value gap. So price moving higher here just makes sense because of the run on the lows. It's a pretty decent sized run, high resistance until these in the moment quick impulses through the liquidity here, and then of course that one that swept this one as well. So this retracement here is definitely logical. And again, if it can't be rejected from this level here, I wouldn't be surprised if it tries to dig even deeper. If it gets above this level, my eyes go to these equal highs here, because this is where everyone's stop is at from this delivery. So yeah, this is beautiful. This is what we want to see if it's going to continue to drop. Violating this high and then violating the midpoint here, we could start to paint a reason or paint an excuse to then look to maybe target up here. Again, counter trend idea, given the overall downturn, our mind does not switch overall, right, from bearish to bullish, right? If any type of retracement here is just that, because of what the higher time frame tells us. This here could be a bearish breaker. We don't see the DXY really supporting the bearish breaker, but seems as though it's gonna, at this moment, continue to apply pressure, or not pressure, not strength, but interest in price going lower. But we'll see, right? See what the behavior is here. Violating this low would make me a lot more confident in the fact that it is still interested. If it leaves this open, technically we have a run on stops. DXY is now declining. There's a likelihood for it to decline. Bonds are still bullish. seems like we're probably going to leave this. Let's continue to monitor that. Getting above this high turns these down candles into a bullish order block. And then again, my eyes would go directly to this area up here. So let's see what happens here. Got possible interest for a counter trend move to the buy side. And it violates this low, that kicks me into interest for sell side. Otherwise, my eyes are directly here right now. So let's see if that is justified. So let's see if this turns, if this closes outside of these consecutive down candles we're using as a potential bearish breaker. We're going to use that as an inversion level to also continue to build a reason or narrative, a narrative, but yeah, reason, right? To see price try to attack this buy side liquidity up here. You see the strong deep retracement here, right? Again, all these one-sided moves that stop and come all the way back and then continue to go. This is all high resistance. So in your notes, or your reflection of today, watch this fair value gap here and the midpoint of this potential inverted bearish breaker. But put it into your notes that all of this is high resistance. All of this is low probability. All right, and again, if you are able to then eventually go into the market and identify these things, you can cater your risk management better. Because if you're just risking a ton all the time, 1%, 1%, 1%, in times when it's a little more shady, then you're opening yourself up for more risk. But yeah, watch those levels that I just mentioned. Watch that high, a little group of highs up there. Again, if we can start to get another displacement down below, then of course the interest turns away from this counter trend buy side liquidity pool back in alignment with the overall higher time frame downtrend. Excuse me. So yeah, there it goes. Using it as an inversion. So if you use the logic that I just mentioned, because we're up here and the fact that my eyes moved up to there, entry here, stop below the 50% of the inverted breaker. Just about 50 points, 30 points have already been offered. But the overall real-time adjustments and analysis here, again, proves yet again there's no reason to worry about, oh, I missed a move. Who cares? Okay, doesn't matter. There's ways to paint a picture. It's hard to submit to that when you're new because you just don't know what you don't know. But again, sit and rest assured that even if you don't know how to do or how to trust this type of thing now, you'll eventually get it. Especially you spend time here just watching different things that are analyzed. Or you watch in the private community if you're a part of that community on a daily basis. I mean, it's undeniable and unreasonable to think that you won't be able to take the experience and use it on your own. Success breeds success. So the more you're exposed to the proper things, the right mindset, the way that you're supposed to do things, the better things become, the more seasoned you'll be. Watch this in this other fair value gap in here. So DXY is given some small little retracement. We see these up candles here. Then we see the down drop. So let's see the response off of this. Wait, can you see that? I don't know if you could see that. Let me move this up. So this consecutive up candles here, we got to watch the behavior there. And again, we need to see a strong displacement again for us to get back in line with, continued downside. If there is none, we got to just submit to the fact that we're retracing. Seems as though this target we pointed out ahead of time is being attacked. We do got this order block, fair value gap, and we have a swing low here. This is on the 30 seconds chart. But then if we scroll up a little bit, we can start to see a couple other different pieces of context. These consecutive down candles, let's observe how the behavior is above this, right? See how the midpoint of this up candle's respected or not. Let's see what's on the 5 minute. So we came right back to, or almost right back to the low, previous week's low. So again, this large retracement here, somewhat large retracement, again, we need a displacement. So all the stuff we just talked about was a framework related to an upper time frame slight retracement inside the overall move that's going to the downside. Because we were framing something going higher temporarily, that doesn't mean that our overall analysis disregards the overall higher time frame that we've been, rooting ourselves in all morning, all week, the last 2 weeks. It's just a temporary move, right? Like it's retracing. So we framed a whole idea, retracing, possibly targeting, opposing liquidity. Once it gets up into here, now we could think if there's a displacement that sets up our opportunity and other things like intermarket relationship wise can fit inside of a continued move to then target, in this case, this low, then we could get back in line as long as our opportunity for our model still presents itself, right? So you've kind of gotten a slight view of how to navigate a counter trend idea while still holding on to that higher time frame until proven otherwise, right? So yeah, we're going to continue to monitor this high up here. This is where the liquidity is at right now. Here, up above these highs, but that's a little too far away unless it, provides more evidence. I'd assume that, getting up into this area would then make me trust if a model performs, right? If it shows itself, if price was to get up into this level, maybe see DXY continue to drop, this would be my area of potential longer, deeper buy side liquidity targets, like maybe up here. But if that doesn't, that's not justified, I have no interest in trying to push extreme buys. For the minimums, right, at lower risk, it's reasonable to try to target this, right? So far, it's kind of failed to get up there. But if you would have identified this like we were talking about, maybe engage something like that, if it makes sense to you, there's minimums right there. All right, minimums were offered here in that first opportunity we were talking about, kind of against the rules, obviously, right at the open. Nonetheless, minimums were offered. Maybe you took an entry in here, seeing this as a run on stops. Maybe you trusted this inversion for value gap and the things I was mentioning that were supporting our interest to hold price going lower. Maybe you entered something in here, easily caught the minimums. Maybe you would have had to wait a little bit, but the macro lines up with that beautifully. And you can see how price delivered, and all of the supporting factors allowed for trust that these lows were going to be violated, as we talked about all morning. And then once price delivered down there, maybe you missed that, right? Maybe you wanted to think about this as a potential YouTube model, right? Maybe you tried to enter up in here for the YouTube model entry, right? Run on stops, proven delivery, right? Price returned to a fair value gap. And then it dropped, took out this low. That's plenty. Not really much in here to make an argument about, except the breaker. If price would have returned to there, that would have offered an opportunity, at least for me and the way I view things for my model. But now that we've taken out the lows here, this displacement up here, once we got above this breaker area, that turned it into a slight inversion. Use that to try to aim for these highs up here inside the overall downtrend, basically a retracement. Kind of failed to get up there, but from here to there, that was plenty. That's over 40 points. That's enough, right? So there's multiple different areas in here that we've been observing and identifying that offered the minimums. But if you're going to sit here every day and try to identify hundreds of points a day, as if that's reasonable in any capacity, it's going to be much harder, very much more difficult. It's possible, but again, you have to frame things from the higher time frame. You have to be seriously married to that higher time frame. You have to know how to navigate from that higher time frame to the lower time frame. And on your way to learning to get to that point in your journey, in your skill set, accepting the minimums is critical. That fucking stomach is growling. Should have ate some breakfast. But yeah, so speaking about the macros again, also, we're inside of a macro almost. We're 10 minutes before. We're still respecting this area here as an inversion breaker. So yeah, let's see what happens if, we've already swept out this low. This is acting as support, breaking above this high. That's a run on stops, shift in market structure. Let's see if some type of opportunity presents in here to get us up above these highs into, some of this gap in here back above this sell side liquidity pool that was taken earlier. All right, and then whatever happens above these highs here, that's going to determine, if we can get a displacement away from that, that's a very reasonable pool of liquidity to pair more smart money drops, right? Otherwise, if it just continues to rage through and gets into this level here, and then maybe we get back above this area, I start to move my mindset to these highs, maybe even further, and look at this as a possible low of the week. And then maybe, maybe if that was to take place, maybe that's triggering in, this as a market maker buy model, right? Then maybe that ends up turning this week into a bullish week after we have ran over 1,500 points to the downside. That'd be reasonable, right? Still would not turn the higher time frame narrative from bearish to bullish yet, because again, we have 3 PD arrays. So we continue. So the point of me repeating that fact over and over is because there's so many times people flip-flop and they can't stick to a bias, right? They can't stick to one narrative and they get pulled all over the place. And that's just not how you need to look at the market. That's why I separate bias and narrative. Bias can be retracements, it can be continuation. Narrative is the overall direction on the higher time frame where it's headed, right? So, the bias can change because of retracements, but the narrative, the reason they're separated highlights the fact that the narrative doesn't change as much as the bias does, right? So it kind of helps you realize, like, okay, narrative and bias can be different, and narrative takes longer to change, takes more evidence on that higher time frame and overall intermarket relationships to change, while bias can fluctuate because of retracements, continuations, and consolidation. Right? So that's why I personally separate them. Not everybody does it that way, but for me, that helped it make sense to me, so I can then allow myself to trust the narrative, okay, the actual picture where it's headed, but then also be able to have a easier way to frame out or identify changes in the overall bias within the overall actual direction. Which again doesn't change. You could have the same narrative for a whole quarter, right? For half the year, it can be a specific narrative. Not that it always does that, right? Sometimes it changes. Quarterly shifts take place, and so on and so forth. Oh yeah, that's another thing. Just a reminder: new quarter comes very soon. Okay, so on the 16th of March, we have to change our contract month to the next quarter. All right, so look, we're still respecting this. Now we got an inversion potentially. So we still got to run on stops, still got shift in market structure. Failed to violate this low, that would then would have made me trust downside may not be done. Because that has not taken place, right? There's an inversion here, shift in market structure. I'm very confident that we're going to blow these highs out. Again, you'll do what you will with that information. We're going into a macro in 5 minutes. Look at this inversion for value gap here. Let's see if that is the moment that allows for price to get up above these this buy side liquidity pool here. We're in a consolidation right now, so it's being held a little bit. But there you go. Yes. So let me just prove something to y'all one more time, as I generally do. So what I just called there, something that I executed. Okay. Trade of 8. Do you see? So all this waiting we did, all this waiting, all this conversation, trade of 8. Okay. Top step. All right. Demo accounts are not allowed on either of the two brokers or companies that I use, which is AM Futures for personal funded account, and then of course Trade of 8 for Top Step, right? But yeah, so you can see the price is now rejected, right? That run from here to there, that was my only target for the buy side here. You know, taking a trade from this to the high up there. I think I took it around, right up in here. That's where my limit was. It was basically right above that. So it's a 42, 43 point move. We've been chilling the whole time. We let all this happen. We're not concerned at all. Framed a very small little scalp inside of an overall scalper's market today. It's very, very choppy, sloppy, lots of chaos, right? Overall, we gravitated to the area we wanted to gravitate to, right? So targets have been met, right? Reversal target for a counter trend framework, target met, right? For the last 2 weeks, downside targets we outlined before the fact, targets met all throughout the month of January. Well, the second week of January to the end, targets met. If you go back and look at some of this stuff, I mean, that's the thing, that this stuff it becomes simple. And the more times you spend here, I hope that you start to see that you have no reason to not believe in yourselves, that you don't have to be so stressed out if you feel like you missed a move, because you most likely didn't, especially if you didn't see the move. If you're lacking trust, if you're scared to take the trade, you probably were over leveraging and over trading. So now you have some scar tissue you got to work out. That just makes it even more important for you to listen to what's being taught, build the systematic approach, and continue to study it play out. Watch the things that are called out and watch them play out for yourself, right? Journal in your notebook how it was great to see you calling the trade, even if I call it, or if I call some type of narrative and you mark it up similar to mine. Journal to yourself that you called it, you did it, okay? So then your subconscious mind doesn't know the difference, and then over time, as cliche as it sounds, it actually changes things, the way that you feel about yourself as a trader. And it's one of the real serious things that we have to do if we've built so much scar tissue up, beating ourselves up. Oh, I'm a failure, all this chaotic nonsense. It's not true. We can be very mean to ourselves. It's not, this isn't like sports where we got to brutally attack ourselves to try to motivate us. Like in sports, sometimes coaches can be a little harsh. In this, you can't do that. We can't do that with constructive, harsh criticism. It doesn't work that way. You'll just beat down your confidence. And the next time you try to get into a trade, especially if you continuously don't want to follow the rules and you continuously have to pay the price, you're going to continuously be building in this beaten dog syndrome, so that when you try to get into a trade that fits your model, you're going to hesitate, and the price is going to take off, and then back to the spiraling negativity we go. It's just not, there's a way that we have to operate, and it's very, very critical to understand that. It's not the sexy things. It's not the, oh yeah, like, it's so motivational. It's part of the realities. And it's just something we have to submit to. Right? I hope you guys can still see the chart. Showing us some issues. Hopefully not. Hopefully you guys can still see it. If there's ever any issues on the stream, just let me know in the chat. I'd be happy to try to fix that. Hopefully not. Hopefully everything's good still. Stupid YouTube. Yeah, let's see how this what happens here. What takes place here? We're in time distortion. time distortion inside of the macro though. So I mean, we may even get one more attempt higher if DXY is going to continue to be weak. But again, we're inside of this very sharp consolidation, triggered in people's stops here, and now it's just holding them in, keeping the ability for them to believe that there still is a chance potentially. And give a strong pullback, probably stopped out everybody that tried to buy in here and held too long. But yeah, let's see how this behaves. Inversion. Whoops. Got this inversion for value gap. Yeah, so this potential breaker here that we were using earlier, it's not really much of anything at this point. It's been well traded through and above and below and all that. So now we got to move our attention over here. Go back and see what's happening here. So this is a decent response off the reaction from the high and the fair value gap. Again, that's all coupled with this weekly bearish order block. If we stay above and continue to stay above this low, again, the longer and more aggressive it trades above the low here, if it comes like a little bit too deep, like past the 25-50% of the range, again, that's not supportive of price continuing to go in this case to the downside, because it's traded aggressively back against that. So maybe it took the liquidity here, maybe has some other opinions. Right, so yeah, we do see that the bonds are now kind of given a strong rejection. We see that the yields are now continuing to play a whole lot of games inside this weekly fair value gap. We've kind of blown past this sell side target I had identified to at the start of the week. And so it kind of blew past that, blew out the low here. So we see SMT here as well. So that's kind of interesting. I'm going to have to see how long that survives, if that continues to be intact. Again, there's a lot of different things happening that could lead to price overall changing its sentiment 12 days before the actual new contract month or new quarter comes into play. So these are important pieces of information to take into the quarterly change from the March contract to the next contract, or from the first quarter to the second quarter, because if all these things stay present going into the new quarter, and then all of a sudden we see some very dramatic change in the overall direction of the market, that's how you identify quarterly shifts. All the different elements that I've mentioned, from COT, seasonality, the overall Kraken correlation, S&T on the higher time frame, whatever price was doing leading into the new quarter, if all that stuff stays intact and then price changes, right, or goes against whatever price was doing in the asset we're watching, that's how you can gauge a quarterly shift. That's how you can gauge whether things have changed. And then, of course, 3P array rule and so on and so forth. Tony said, I have the best results doing it like that. Also from the higher time frame analysis. Oh, yeah, exactly. Well, we don't always win, obviously, right? No one can be perfect, and no one should ever lead with that, thinking that they can always win. Not saying that you think that. Just a reminder for some. You got to admit that we will lose. I lose. I'll be the first one to tell you that sometimes I lose. But the accuracy behind where we think price is going to go, the patience in terms of being able to wait and trusting the fact that I'm not missing anything and submitting to those things and trusting my risk rules, all that stuff leads us to more trust in ourselves, and then of course the accuracy and analysis. It's derived from all these different things that we utilize. So the accuracy goes up. Last year fluctuated executions between 72% and 82%. So all within there. I was sharing it on social media too. You go back and look at my highlights on Instagram, and I was showing the evidence, alongside obviously all the live calls and calling it before it happens, everybody seeing it take place. At least for those that pay attention, they see what's going on. So yeah, let's we still see this pretty strong response here. Let's see how the dance behaves inside this fair value gap in there. Is it going to hold price? Let's see what this does. Go to the 5-minute. We could reasonably place this here as well as a possible supporting idea for price to maybe want to give a more protracted move. I'll tell you one thing, if this 5-minute fair value gap gets violated, again, my attention goes directly to this low again. But yeah, if DXY continues this, we may have witnessed the low of the week form. And then, if we start to see massive displacement back to the upside, this consolidation, this may be an accumulation, maybe a second accumulation. Price breaking up above, this high could end up being a smart money reversal. Maybe we see a first stage distribution here. Then if price was to get up into this level, I wouldn't be surprised if price does blow out a lot of this and things may overall change. But again, that's obviously contingency plan going against the higher time frame view of what we see currently. So I'd have to see more evidence to believe that is what's taking place. But again, when that time arises, if it does, we'll have the tools and trustworthy skill sets to be able to make those adjustments real time and with little to no issues. All right, so yeah. So again, I said when price gets above these highs here, we got to see the behavior. Once price got above that, just stalled out, time distortion. But now let's see what happens, right? Is it going to give us a displacement one more time and start to give trustworthy delivery back down below this low? It may not, because we already blew out these significant higher time frame lows, and price likes to hold inside those areas because think about all the orders that are in there, they get stuck in there, get stuck below these lows, and or highs, right? It does the same thing above old higher time frame highs. And again, the way it displaces, if it is going to stay above and go higher, that's going to give us evidence, But currently right now, things are held very distorted in time. We're inside of the 750 macro, pretty much the last macro that I like to operate within. If, of course, I didn't find a move. We found a couple of moves today executed on this last one. Got us up above these highs. But again, price is now just stuck, right? So we need to have another displacement that gives us a fair value gap. Preferably in this case, I'd like to see if I'm going to sell. I want to see a displacement below this fair value gap, a slight return back into it. That would potentially give me enough evidence to then try to target this. Stop will go above this fair value gap if it turns to a downside inversion. And then, that would be the scenario I'd like to participate in. Otherwise, there's a likelihood for price to just hang around in here. And then, of course, if it does violate this high, we're going to have to deal with whatever comes after that and adjust. Yeah, I hope everything so far has made sense to you guys. I hope you guys have had the chance to gain some valuable experience navigating a high resistance condition. The way that I've operated this morning inside this condition, the things that I've mentioned mindset-wise, behavior-wise, just the way you need to look at things and how you need to slow down and what validated particular things. There's just a laundry list of things that we talked about today. So I hope that there's been a lot of stuff that you can put into your own trading, And the next time when you're inside of a high resistance environment, which all the characteristics today were pointed out, the deep retracements, the lack of interest to go in one direction, the rules behind a macro, any of the macros, right? It's best to try to engage near a macro. 5 minutes before, 5 minutes after is okay, but preferably inside of a macro. And then, of course, the 6:30 time, right? The rules around the open how it's probably best to, especially if there's no news, to not take a trade at all until the first macro, or consider until the first macro. That proved to save us today, and it would have saved you, unless you submitted to the minimums being targeted. Maybe you wanted to take a short here, right? But if you wouldn't have taken the minimums, you'd have got beat up. Yeah, so all these rules, all these different ways of thinking, different scenarios that change our mind, different behaviors in price that tell us one thing or another. All these different things inside this high resistance delivery this morning. I hope you guys have gotten value from. And again, just one last reminder: if you guys can like the video and share with your friends, and make sure you subscribe if you like this content, it'd be greatly appreciated. The goal is obviously to serve you guys as best as I can. So again, if you put questions and your concerns, your struggles inside the chat, or let me know through a DM, through Instagram, I'd be happy to do my best to serve you, because again, that's the whole point. I'm not here to promote an image. I could care less. Okay, I have nothing to prove. I just want to be able to pass the blessing I've been given on to those that are interested and love this industry the way we do. Because not everyone's in this game for the right reasons. So I refuse to be part of that crowd, and it's exhilarating to see y'all win. Like what Tony said earlier, that's the whole purpose and why I'm here. I could be doing what I was doing before and just sitting in the privacy of my own life, but it makes me feel good to help people, because I needed specific help and I couldn't get it, but I had enough. Obviously I had some good people around me, but because I had that in some capacity, it just feels good to me, and I feel like it's the best thing that I can do, just to add on to my appreciation for this industry. And those of you that, feel inclined to listen to some of the things that I say, and take the stuff into consideration, because, the goal is to help you with anything that I say, anything that I do, the things that I show, the mindset that we talk about, all these different rules and different things. It's to make you better, so yeah, I appreciate you guys. But yeah, so far, obviously it's, there's been a decent amount of opportunities we've been able to identify. I don't feel that there's any further reasons to push any opinion just yet. Price clearly is telling us, it's voicing to us through its price delivery so far, that it's a rattlesnake right now. Throughout all this, it was a rattlesnake. Now we're back to rattlesnake vibes. Did I say rattlesnake vibes? Rattlesnake vibes. Oh, man. But yeah, so we're one day ahead of also some of the insanity being started. And then, of course, we have NFP later. So if one thing I do want to mention, too, if you did get yourself a good opportunity and you did win anything in any capacity, even like $1 or $1 in a demo account or anything, you've made some decent decisions. There's no reason to really risk that good feeling, right? Sit in it, enjoy it, reflect on it, and don't let the volatility, interest in FOMC, NFP type of weeks entice you to do more than is necessary. Because if you have a live account, you want to be extra cautious, not scared, right? Very strong distinction. You don't want to be scared, okay? You want to make sure that you're cautious and you have the rules in place that are meant to protect you, so then you don't have to fear. But in environments like this, it's more important than ever to make sure you have guidelines that help you stay safe, because you can't engage and have opportunity if you don't have an account. If you blow your account or you destroy your mindset, that's like being in a war, in military, going into the battlefield and shooting yourself in the leg, right? Like, that's a bad decision, right? While bullets are flying already as well. It's more crazy in these environments. Like, bullets are flying, and if you overtrade and break your rules, you're literally shooting yourself in the foot while the bullets are flying at you, right? So you don't want to do that. You keep your rules in place, keep the safety on, and stay within your rules, stay within your guidelines. I spent years doing that, and it was hard. Yeah, because people don't realize too, like when you put a trade in, what happens? You start getting cortisol and dopamine running through your brain, especially when you see profits flashing, right? So and you do that enough times, what happens if someone's addicted to drugs? It's the same thing, right? There's dopamine pumping and whatever else as you do the activity. So it's the same thing with this. That's why when you overtrade and make it a habit or do these bad things and they turn into a habit, it's even harder to quit doing them if you've built them into a habit. Because now you got to go through the habit of, the process of breaking a bad habit. And habits are difficult to quit. Yeah, and some people never overcome the bad habits they create in life, let alone in trading, you know. So again, it's another thing that most people don't talk about because they don't get it. They don't know. They haven't dug into the intricate details of things like this. They just see entries and money and opportunity. But in order to make it so you can be afforded those opportunities and be successful, you have to be able to understand the right ways to do things, the wrong ways to do things, the risks that are involved, how you can mitigate those risks, and how you should behave, you know. But yeah, I know where he's Eddie. Yeah, so let's see what takes place here. You see this large push right here from the DXY. Again, this level here is going to be significant. This fair value gap right here. See how price behaves if it can violate that. Let's see what happens. We got an order block here. I mean, it's a very sloppy range up in this, all this business in here. DXY does seem as though, you know, it did decline, but now interest is somewhat building. Bonds and yields are really useless at this moment. They have been for the last couple of weeks. So again, because of tariffs and all the conversations surrounding the adjustments that are taking place. So things on the back end are really, really making moves. So, but when the markets kick back in alignment, and we've already seen some insane volatility, you know, so when stuff gets back in alignment, it's going to be extremely fun. I mean, it's been fun already, even through the chaos. But so yeah, we broke through this fair value gap I was mentioning for us to watch. So let's see how price wants to utilize that. We've got stops down here. DXY seems to still have an impact going higher. So let's see if continued drops, because that's the higher time frame, right? We don't change it unless it is proven otherwise, and nothing has changed. Now we're in line with the downtrend. So now our eyes go directly to here. We're going to watch the response if price can get back into this fair value gap right here, this inversion, the 5-minute inversion, and see if that can offer some kind of opportunity inside that to then target further downside. So we can see these consecutive up candles here too. So again, I'd need some type of retracement in here. I mean, if you even look on this seconds chart, looking all throughout here to try to, I mean, you got to try extremely hard to try to find the YouTube model opportunity or any other opportunity. I got another inversion for value gap here. Notice how that's being pretty beautifully respected. We've continued to stay below the daily first fair value gap. We've continued to stay below previous week's low here. Notice how it is really not trying to get above that. That is very clearly showing us the price is still extremely weak, or is extremely interested in offering further sell side delivery. So we're going to see if that can continue. Here's that retracement. Now let's watch the behavior here. Is that going to trigger us to then break through the low here? If that doesn't hold and we break above this high here, interest then potentially would move up into maybe the rest of this. But otherwise, like I mentioned, if this is going to hold, it's going to push us down to there. It's a very reasonable assumption. Right? No picking bottoms, no picking tops. So far, that has served us very well. Right? A very, very sporadic relationship that the DXY and the indices are having with the bonds and yields right now. So again, it's to be expected because NFP. Yeah, so let's see how this behaves here. Should turn to an inversion like I mentioned early on. Let's see what happens. Oh. So let's see the behavior here. Got the midpoint right here of this fair value gap. And so we took this high here. Yeah, let's watch how this behaves. If it can get up above here, then we could start to make a different opinion. For now, I'm going to still continue to try to find evidence that it's going to break these lows. But if this high is violated, mind you, we're inside of a higher time frame downtrend. Can't forget, right? I don't want you guys to get lost. We're inside of a higher time frame downtrend. Price has declined. It's broken all these higher time frame levels. It retraced all the way, unseated early sellers into that downtrend that attacked the sell side. Price is now looking like, at least from this moment, it's failing to get back below the lows here. The level I wanted to see that would have allowed me to trust price with another leg lower has now been violated. That 5-minute inversion for value gap. Traded through it, right back through it. Because it traded both sides aggressively, it shouldn't need to come back to that. Now that we've broken above this high, DXY is falling. It may be interested in giving us another attempt at this buy side liquidity up here. So yeah. That's my view as far as right now. And as you can see, since we violated both these lows, price has just been going sideways. So the mindset, as far as what we're identifying in terms of overall targets, considering that our larger perspective has been completed already, our objective is to identify the most near-term previous highs and lows inside of this consolidation and intraday volatility inside this AM session. And again, that's one of the more difficult things to do, aside from the higher time frame navigation, right? But there's specific ways that you're able to navigate it. Obviously, like I've been pointing out different levels and saying if they get violated, let's see if this happens. If they get respected, let's see if this happens. And then of course, this is our near-term buy side, near-term sell side. Sell side failed. If we switch to the S&P failed, the Dow took it, right? So there's an SMT now at the lows supporting the idea that since this fair value gap's holding, it's pretty likely that, we have a chance for it to attack the highs up here with bearish DXY. Again, inside that higher time frame view of a downtrend, so you can't forget that. Because someone in here is probably getting whipsawed around thinking that, oh, the whole idea has changed on the higher time frame and everything has now been completely reversed and changed, but it's only the intraday volatility. It could retrace up into here and still be valid to drop because of the higher time frame. But if you don't root yourself there, a run above this high would make you think completely different. Oh, it's not even bearish at all. But yeah, we'll continue to see. So we got this SMT at the lows. We now have pretty much a solid commitment for price to, at this point, favor possibly sweeping this high one more time. We started that idea or that assumption. Once we saw how price delivered in here, fast-paced downside, fast-paced upside, hit the midpoint. Now that we've traded away, it will most likely not come back into it. We've swept out deep sell-side liquidity pools. It's now staying above at least this extreme low one, like the one that's below this upper one. And then we have a reasonable buy side target here. DXY seems to not be very interested in giving more displacement to the buy side. And then, of course, I said if it shifts this high here, that may act as a shift in market structure. We're leaving open fair value gaps in here. Can't even get back into them. And we have a very logical target up here inside of this overall daily range intraday volatility. Again, never forgetting what the higher time frame is doing. We're inside of a larger downtrend that, for one, has been extremely aggressive. So, it needs to at some point come back against people. Like on the weekly chart, I don't think there's one bullish candle that's taken place in 2 weeks. So, that's dramatic. It's about time that we get some kind of retracement. We don't just demand that and force our will on it. But if things start to show that that's what's going to take place, the price is finally going to give some type of retracement to the buy side, that's reasonable. And then we can make adjustments according to whatever we see. But yeah, so let's see. We're back at this inversion we've been using throughout the morning, or at least since here. We also have one down in here. We got this fair value gap up here that was used. Then again, we got this 5 minute and then just a big sloppy mess in there. So again, let's see how price is going to continue to behave from here. Got a fair value gap in here. You could just see we've been taking lows, taking highs, coming right back, taking buy side, coming right back. Inside this overall consolidation in here, we can get an equilibrium view. Just continue to study how this this range right here on this time frame, how this equilibrium is respected. And of course, we got this high to that low, which is the larger parent time frame or parent price leg that you can also monitor. Right? If you go from this extreme high for the AM session to this extreme low, equilibrium is somewhere near that first sell side liquidity pool. Yeah, it's somewhere up in here, right up in here. So we're still in a discount overall, right? Nothing has overall changed except the potential likelihood that this high may get violated. If we leave that intact, there's a strong likelihood that price is not really going to do much more than it's already done because of the fact that NFP is coming. It's just, it's just what it is. It's one of those things that you have to submit to going into weeks like this. And you can imagine all the people that blow their accounts because that's the reality, but they want to fight against that. They want to see 150-point moves in an environment that may not want to offer it because there's bigger and better things that are going to take place later on. They want to build sentiment over and over and over. So then when NFP comes out, they could hurt the most people. Right, again, so we're still declining here. Let's see how this fair value gap down here is respected. If it was truly wanting to give a very strong displacement to the buy side, again, we would not have came back to this. And again, it may still want to come back, or come back to this high. But if it was to do that, this is a deep retracement. Just going back to the high resistance behavior we've been dealing with all morning. You can just see how that makes it a little harder to get into an entry, have a reasonable stop loss, and trust that price is just going to move like butter, because it's just not. And there's ways to gauge that. There's no news today. There's NFP coming very soon. Cracks in correlation across the board. We are a week-ish, or 2 weeks-ish away from the new quarter. So the closer we get to the new quarter, or the end of this quarter going into the new quarter, that's another time in the year where you can anticipate sloppy delivery, cracks in correlation. So again, there's ways to anticipate when price is not going to be in the smoothest conditions. And those are just some of those times. And you again could couple that with seasonality, and sometimes COT can be useful, right? So yeah, just some back end things to think about. All right, so yeah, let's see how the behavior is here. DXY is definitely showing interest to continue fading down to the downside. We see this as a potential retracement. Came all the way back to this. This is not really what I wanted to see if it was going to continue to run higher. But the high resistance behavior, I mean, it's you can't put it past price to do this, right? It's deep retracement as it's been doing all morning. Opened up a couple times. Sell side targets were hit. This buy side target with this move here was hit. And we've just been unseating everybody. Anybody that got in anything this morning has been stopped out. Whether you were up here trying to buy, or you got stopped out. If you were down, somewhere in this area trying to sell, you rushed your stop to there, they stopped you out. If you tried to buy here and expected to turn around for no reason, just because you feel like it, price would have stopped you out. If you're trying to short in here, thinking that this enticed you, which was probably the plan, they came back and stopped you out. If you tried to buy up here and you had too tight of a stop loss, right, they may just slam through and stop you out again. Right? DXY is really, really open up to the downside right now. So yeah, let's see. There's no news happening. That was kind of like a weird jolt of volatility. Is it no, not even a new hour. Yeah, very interesting. Yeah, see this fair value gap in here? We want to see if price gets down below this weekly lower portion of this order block I have outlined. We want to observe the behavior around that. Is it going to act as resistance and then continue to slide? Then if that's the case, are we going to continue to see the bonds go higher still, with the yields continuing to slide? Because that supports DXY dropping. And then, of course, that may translate to, if we see an impulse higher here, that may result in us finally seeing things start to slowly get back in alignment between the relationship with the bonds and yields with the indices and DXY. But until that's proven, we continue to march lower in alignment with that higher time frame. Right, and maybe you guys are wondering why I've said that probably over 100 times, right? In terms of everything being symmetrical and all the different things that's been repeated. It's because we got to pay attention to all these things. It's very important. Intermarket relationships, the cracks in correlation, the whole process that we outline on a regular basis, every single call, every time we spend time together. It shows the validity behind the repetitiveness and how things are not random. There's a rhyme and reason behind every decision. Oops. So let's see what price wants to do up in here. Let's go up a bit. If we look at things from this perspective, we see that there was a retracement into that. Consecutive down candles here. Price went higher. Sharp decline. So again, the higher we go up in time frame, the more clear it looks in terms of whether price is favoring more sell side or buy side. It's clearly favoring continued sell side, but so is the DXY. Right, so again, there's that crack in correlation we got to be aware of, because one of the first signs that we are in a healthy environment in terms of overall, like the trend, whether it's trustworthy or not, or if we're in a low resistance, high probability environment, first prerequisite is the market symmetrical? All right. Is everything in alignment the way that it should be related to risk on, risk off behaviors? Because that's when things are really easy. That's when things are one-sided. That's when things all agree. You're able to justify to the maximum what direction price is going to go. And then of course you use all the other tactics, validation, invalidation, seasonality, all the different stuff, and what day is it? Right, that's also heavily impacts high probability versus low probability. Is there any news? Right, that also impacts whether things are going to be clear or high resistance, low probability. Which news events are coming, because they all have different characteristics. Events like this week generally lead to a little bit more difficult conditions. Again, that's not to put fear in you, make it so you can't trade. That's just to tell you need to modify your risk protocols. That's why we have something called the NFP protocol. The FOMC protocol, the CPI protocol. It's all related to dropping your risk. It's all related to understanding the environment and then acting in a way that is beneficial to that particular environment so we could safely operate, And because those things are in play, because we have those things structured and organized, what is there to fear? So we go in knowing our model with no fear. Patience, like today. We waited, and then finally there was a small little piece of price action that we were 100% sure on. We pointed it out, and price ended up delivering where we said it would go. And, there's been multiple times where, 30 to 40 points have been offered, the minimums. There's been times where price ran to the minimums and cut back because we're in a high resistance environment. If you don't know that, right, if you don't know how to gauge that, if you don't understand the impacts of particular conditions and specific times of the year and, these different overlapping pieces of information, you'll be in here trying to swing like it's a trending environment overall, right? Like there's no reason to have any risk management, right? You go in there swinging like that, you get taught a lesson fairly quickly. And then there's a good reason for you to fear next time you go into trades, because you don't have a plan, right? You don't have a reasonable understanding of the fact that, you need to operate in different ways during different times. It's like you're not going to go 500 miles an hour in a 25 mile an hour school zone on the street. There's a reason for specific rules. It's very much the same with the specific rules that we operate within. Different circumstances require different ways of viewing the market, different rules, so on and so forth. And today was a beautiful example of the realities of that. It's been very high resistance. We could see that there's still continuous favor towards gravitating slowly and in a grinding fashion down below lows continuously. Lots of time distortion, right? Time distortion, choppy, sloppy stop runs, delivery, right? Choppy, sloppy, run on stops, back to time distortion, but gradually reaching towards the overall objectives that we outlined today. Whether it was the actual trend aiming for these previous week's lows that we have identified for the last couple days, couple weeks, but then also what triggered in the ability for us to frame out a counter trend idea. And then aside from that, what validates and invalidates that higher time frame framework. And then aside from that, right, the risk protocols that are different, right, the different mindset, and then everything else that we've been able to discuss over the last week or so, or last couple months. But yeah, guys, I think I'm gonna leave y'all here, and we could put a ribbon on it. I hope that today was eventful. I hope this week and the prior calls that we've done has provided you value. Again, if you have any friends that you think would enjoy these conversations, that can maybe bring value to what it is that we do here as well, definitely let them know that we're hanging out over here, so they can come and join us. And yeah, so if you guys have any questions, if you don't follow me on Instagram, definitely go follow me on Instagram. You can shoot me questions there. Of course, you can always shoot me questions in the chat box or any of the comments in any of the videos. If you have any lesson recommendations or topics you'd like to talk about, maybe you struggle with some things, I'd be happy to cater to whatever it is you guys struggle with. It's the whole point after all, right? That's why the channel's here. But yeah, with that being said, please be safe. Don't do anything crazy. Take to heart all the things that we've talked about so far. It's NFP week, not for professionals. That's what it stands for. Okay, at least for us. There's nothing to fear though, because of if you follow the rules and have these things outlined that we talk about and operate systematically, you have nothing to fear. It just means you have to manage your risk in a more customized way, and obviously that can be very personal to you. And of course, if you DM me, we can come up with a plan in regards to that as well. I'm willing to help you guys in that capacity. But yeah, so appreciate you guys for hopping on. As always, God bless, and we'll be back yet again on Sunday, God willing.